Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
The latest trends. It's a lot simpler. We'll help people make the right auto decisions.
it's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate. Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to.
Welcome. You're watching Ask Profit here at NDTV Profit. I am Mahima Vacharani and with me is Soumit Sarkar. As you know, when we started the small cap buzzers, at that point of time also the Nifty was down by about 42 odd points. Right now it's down by about 43 odd points, down by about 0.17 odd %. The Bank Nifty also in that similar range, down by about 0.19 odd %. Let's try to pull up the heat map to see as to what are the counters that are kind of putting pressure on Nifty as we speak. You have Power Grid, which is the top loser, down 1.7%, followed by NTPC, Eternal, Coal India, Ultratech, Asian Paints, Trent. All of these counters under pressure, down by about 1% each. But on the flip side, you have counters like Tata Motors, PV, which has continued to gain throughout the day and is up 1.7%. BEL, Eicher Motors are some of the counters which are doing fairly well. Let's try to pull up the sectoral heat map to see as to how things have changed there, because at the start today we did see IT leading that pack, but that's come down. IT has cooled off from its day's high point. Defense is leading, up by about 1%, followed by Nifty Pharma and then Nifty Oil and Gas. But on the flip side, media losing ground, down 1 odd %. FMCG continues to be under pressure, down by about 0.5 odd %. In terms of the broader end of spectrum, let's pull up the mid cap 150 and the small cap 250. The mid cap 150 still in the green slightly, up by about 0.2 odd %, but the small cap 250 has turned into red. It's down by about 0.14 odd %. Quickly, the BSE 500 before we move on to the queries for the day. You have Tejas Networks, Orient Electric, KSB on the back of its earnings, Tanla Platforms as well as Data Patterns, all up in that range of 5 to 13 odd %. But on the flip side, you have Home First Finance, Nippon Life, Aegis Logistics, Streamlease as well as Affle India, all under pressure, down in that range of 3 to 5 odd %. So that's with regards to where the markets go. But with that, let me also welcome in our guest for the day, Sameer Dalal of Natwarlal & Sons Stockbrokers, and Chandan Taparia, Head Technical and Derivatives Research at Motilal Oswal. all, joining us now. Will be, of course, joining us shortly. Thank you so much, gentlemen, for taking out the time. Samir, a very good afternoon to you as well. I'll take up the first question, which is from Sriram Raghuraman, who's writing us from Chennai, asking about Poshak Limited. I know this is a very small company. His average price is 821. Wants to know from a 1 year perspective, can continue to hold the counter or not. Samir, any view on this one?
Sorry, unfortunately none.
Sure, no worries. I'll take up the next question then, which is from Lakshmi, who's writing us from Hyderabad, asking about Spandana Spurti. She's got 50 odd shares at the levels of 450. She's an investor. Should she average out or hold at the current levels? Your view, Samir?
I can continue to hold the stock. I think it's going to take a while before it gets back to the cost that she's bought it at. Unfortunately, she's bought it at a high price. But things are beginning to slowly turn around. But if I were an investor, I mean, for me, I would look at other opportunities in the market. So because I feel it'll go up, I'm saying hold, but otherwise there are better opportunities which will move a lot faster in the market.
Right. The next query is coming in from Mohan from Coimbatore, and it's on Laurus Labs. He's holding few shares bought at a price of 400 rupees. He can continue to hold this counter for the next 2 years. Should he hold it or sell? Samir, any view on this?
Yeah, I think Laurus Labs is doing extremely well. The profitability is increasing, the top line is increasing, margins expansion is happening. So all of the things are positive. We believe growth momentum will continue. Would I buy it at this point immediately? No, I'd wait for corrections because the valuations have expanded a bit. But if you are already holding it, stay put. I think the stock over the next 2 years can do well and probably be closer to 15-16.
All right, so that's the view coming in on Laurus Lab. The next question is on Finolex Cable, and this is from Manohar, who's writing us from Pondicherry. He wants to know if this is the right time to buy Finolex Cable from a 1 to 3 month perspective. Chandan, I'll come to you on this one. A very good afternoon to you. What's the view like?
Yeah, very good afternoon. Finolex cable looks quite positive. In fact, we have positive view on the entire wire and cable industry. However, in last almost 20 months, stock has seen a corrective move from 1700 to almost 700 kind of level, but now it is bottoming out and finding the positive price pattern on the daily and the weekly chart. So some buying interest could be seen in the counter with the support of 835. It can head towards 895, 900 kind of levels.
The first live caller query coming in from Mysore. Vishwas, you can go ahead and ask your query.
Hi, sir.
Hi.
Sir, KPI Green Energy stock. Quantity 1131, average price of 450. Current level as 77,000, sir. Seller or sir?
Can you hold for long term, Vishwas?
Short term.
Short term. Chandan, any view on KPI Green? Do you expect the stock to recover anytime soon?
It's very tough to look at the recovery. In fact, the trend is negative. In fact, just 7-8 weeks back, it headed to 500, but again drifted lower and entire recovery fizzled out. So I believe weakness could be there. It would be very tough for the counter to get the swing or follow-up action. However, there is the threat of the downside price structure. So as of now, till it remains below 410, it can go down to 350, 333. So my suggestion is try to exit some position. It would be very tough to get the bounce in the counter.
Okay, so that's the view coming on KPI Green. But the next question is from Sarma, who's asking about two counters. She's got 1 lakh to invest in, and she wants to know whether that could go in Motherson Sumi Wiring or Samvardhana Motherson for the next 1 year. And of course, which one and what is the good time and right price? Samir, I'll come to you on this one. Your view?
So Samvardhan Motherson Sumi is a better bet if you ask me. Even the wiring business is good, but we think the growth opportunity for Samvardhan Motherson is much higher. Ideal price to buy closer to 110. It's run up a bit again. Valuations are a bit expensive. Yes, the auto sector is doing well, and which is why the stock is at these higher prices. But wait for a correction and then buy into that one.
Next caller query coming in from Pune. Mr. Gupta, you can go ahead and ask your query.
Yes, I can. Hello.
Yes, please ask your query.
Sir, I am having 750 shares of CRISIL.
Okay.
Right. I purchased 100 shares at the rate of 500 rupees. Right.
Okay.
Long back.
Okay.
Yeah? Then they got split into 1 to 10. So now my cost is 50 rupees only.
Right. So you want to hold this counter for long term? Or would you want...
Yes, I can. I am already holding.
Okay.
For long time.
Samir, any view on whether Mr. Gupta should continue to hold CRISIL? He's already sitting on a very good amount of profit.
Yeah, continue to hold on to it long term. I mean, look, it'll be a slow mover for the simple reason that a lot of the juice is already into the company. But the rating agencies are going to continue to do well. They have great operating leverage, no capex requirements as such. ROEs and ROCs are very strong. So we'll continue to do well. But if you're expecting it to be a multi-bagger from here over the next 3 years, unlikely. If you have maybe a 7-8 year view, yes, you'll get a multi-bagger kind of a return.
All right, so that's the view coming on CRISIL. But the next question that we have is on IRFC. The viewer is asking if he can go ahead and take a fresh entry into this one. Chandan, after the OFS, of course, not being subscribed fully, they did drop subscribing for its green shoe option, and it's come back to the price at which the floor price was set at. But right now, do you think it's the right time to make an entry?
No, it's the trend and setup of the counter is negative. It has been making lower top, lower bottom on the weekly chart. In fact, now trading at multiple months low level. So structure is weak, and once it holds below 100, it can open the further downside towards 92 to 88 kind of level. So better to avoid. Structure is weak, so it would be very tough to get a recovery. In fact, the time of recovery, we have seen fresh selling pressure. So one can avoid. Counter can see a corrective move of 10-15% from even current levels.
Next query is coming in from Satya from Bangalore. It's on Vedanta. He's holding 3,500 shares, bought at a price of 733. The current share price is hovering around that level. Chandan, any view on Vedanta?
Yeah, one can continue to hold Vedanta. We have positive on the Nifty Metal Index, and Vedanta is one of the strongest counter. So I think one can hold the position with support of 700. It can head towards 770 to 795.
Right. The next question that we have is from Mr. Vara Prasad, who's writing us from Hyderabad, asking about HG Infra. He says that he's sitting on a huge loss on this one. He wants to know whether he should sell, hold, or average. Chandan, what's the view like?
Yeah, so talking about HG Infra, in fact, the trend is negative. And the clear negative trend is visible in the monthly chart. I think from last almost 9 months, every month-on-month basis, the stock is falling down. In fact, from last 19-20 months, counter has seen a corrective move from 1880 to below 550 levels. So structure is weak. I don't see any recovery or follow-up activity after the recovery. So better to avoid till it remains below 600. It can go down to 520 to 500.
The next caller query coming in from Bangalore. Suresh, you can go ahead and ask your query.
Yeah, hello sir. Actually, I purchased Amar Raja batteries around 950. Now the price is like around 850. So can I add more? Can I?
And you can hold the counter for long term?
Yeah. Long term means, yeah.
Samir, any view on Amara Raja? Should he average or should he exit?
I think he can hold on to it. I wouldn't recommend averaging just as yet. Look, there is new capacities for them coming on from the lithium side, which is all going to be great because that will lead to growth and all of that, but it's still going to be a while before they do it. Usually when you put in the capex, by the time the order flow comes, the profitability comes, takes a year and a half. So probability the stock could slide down a little lower first before it goes up, but long term, stay put. I think there is opportunity to make good money in this long term.
Okay, all right. The next question that we have is from Mahendra, who's asking about Texmaco Rail. He's got 1,200 odd shares at an average price of 164. He wants to know if he can hold, average, or exit. Chandan, from a slightly long-term perspective, what are the charts indicating?
Look, the trend setup for most of these counters are negative in the railway space, and it has been making lower top, lower bottom. However, we have seen a corrective move from 300 to now almost near 200. So let it find some stability. One can buy at lower levels, but let it settle at 100 or 95 before we go for bargain buying. Because the way counter is falling down, the structure is weak on every time frame. So just wait for stability, look for 100 to 95 level first before we talk about the bargain buying.
Next query is coming in from Pune. Sunil is holding 1,100 shares of NMDC, bought at a price of
82.59. He wants to know any short-term target on this counter, Chandan, and any stop loss that he should keep in mind.
Yeah, so talking about NMDC, in fact, we are positive on the metal mining counter. However, NMDC is comparatively consolidating in a range, but yes, multiple supports are intact. So my suggestion is one can hold the long position with support of 77. It can head to 92 to 95 kind of levels.
Okay, all right. So that's the view coming in on NMDC. The next question that we have is on Siemens. Anil Singh wants to know if this is the correct price to make an entry, and ideally what should be the right price. Chandan, I'll stick with you for this one. What's the view?
Yeah, so talking about Siemens, in fact, we have seen good recovery or support-based buying in most of the capital goods name. Talking about Siemens, it has been consolidating in a range from last almost 40 weeks. It has multiple hurdle near 3350 to 3380. It is now hovering near to that level. So it requires a small follow-up activity, and I believe this breakout could happen the way the narrow range is being formed after the recovery of last 3-4 days. So one can keep the support near 3260 for an upside target towards 3500.
Right. The next query is coming in from Shikha Kapoor from Bareilly, UP, and it's for you, Chandan. Wants to know whether can she buy BSC at the current levels. Any view on this?
Yeah, so if you ask me about BSC, we are positive on the capital market theme and mainly the capital market, the infra place. So BSC is buy on decline. Major support is at 2550. Till it holds 2550, I believe any decline is buying opportunity for an upside target towards 3200 to 3500.
Okay, all right. So that's the view coming in on BSC, but we've got our next caller. Kunal is calling us from Chennai. Kunal, hi, a very good afternoon to you. I believe you have a question on KPIT Tech.
Yes, good afternoon. I would like to know the outlook on KPIT Tech since it's a little bit in the oversold territory. So any short-term to long-term insight would be helpful. Thank you.
Okay, all right. Samir, I'll take this up with you. KPIT Tech, what's the view like?
Yeah, so we are positive on KPIT Tech. We honestly believe the entire AI thing is a bit overdone. The correction in the stocks is a bit overdone. Now, I'm not saying that growth is going to come back in that space right away now, but KPIT Tech, when you look at it, it's not a pure play IT company, right? It is a product-based company, I mean IT solutions, but a product-based company which makes products for the auto sector. We believe that space is going to grow, and the stock has corrected quite sharply and the valuations have become a lot fairer. So we think this is a good time to start accumulating KPIT. I think over the next 2 years, you will make good money. So buy is the call on this, but accumulate it slowly over the next maybe 3 months.
The next query is coming in from Ashwini from Chennai. Wants to know the short-term target on Bharat Electronics for the next 2 to 4 months. Chandan, any view on Bharat Electronics?
Yeah, so we are positive on the selective defense and mainly the BEL. It looks quite attractive the way every small decline is being bought. So he can hold the position with support of 432. I think the query is related to BEL. Yeah. So with support of 432, it can head towards 474, 82 kind of levels.
Okay. The next question is from Bhavani, who's writing us from Chennai, asking about Bajaj Housing Finance. Wants to know if this is a good buy at the current rate. Samir, would you recommend that?
So, okay, let's put things into perspective. Bajaj Housing by itself is a good company. Growth is good. Valuation is a little expensive. But if I have to make an investment in a housing company, I wouldn't put my money into Bajaj Housing. I would rather buy a Sammaan Capital at this point or an LIC Housing Finance. Sammaan being the top pick, one, because they're getting the fund infusion, new promoter category coming in. So what that will do is lead to a re-rating. It's trading at under 1x book value. LIC Housing Finance also trading at 0.8 times book value. Yes, growth has been a bit difficult, but we believe that as the banks vacate the housing finance space when corporate India starts borrowing, we will see the housing finance space growth coming through. And then what you will see is both of these counters will get re-rated up, which is not going to happen with the Bajaj Housing Finance, which is trading at 3 times price to book. So for me, those two are the better picks. But in all fairness, Bajaj Housing is a good counter. Would I buy? No, because of the other two, not because of its individuality.
The next caller query is coming in from Hyderabad. Madhvi, you can go ahead and ask your query.
I'm holding HCL Engineering 150 shares. 811 is the price.
Okay.
So is it good stock to continue for long term or I have to exit?
Okay. Samir, any view on HBL Engineering? Should Madhvi continue to hold this counter for long term?
Yeah, unfortunately, she's bought it at a very high price. Honestly, if you ask me, we were positive on the business when the stock price was closer to 300, 350. If you go back maybe 2 years' time, since then the stock ran up all the way to 1,000 and has come down a bit. But valuations are still on the expensive side. The railway offtake, everyone's been hoping will pick up further, which is not happening. Of course, they do other electronics and defense equipments and all of that. So from that angle, we believe growth will happen, but valuations are a little bit on the higher side. So maybe hold an average when it comes closer to maybe 550, 600.
Okay, all right. So that's the view coming on HPL engine. But moving on to our rapid fire round, Samir as well as Chandan, you both know the drill. Try to keep your answers as short as possible. The first one is on L&T. What's the target for the next 2 years is our viewers' question. Samir, your view?
I won't give a target, but yes, you can expect at least 10 to 12% CAGR returns over the next 2 years.
Satish from Bangalore is holding 25 shares of Gokaldas Exports, bought at a price of 815. Should he continue to hold or average or exit? Chandan, any view?
Can hold for target of 850 to 900.
JM Financial is the next one. Is it a good time to buy? What would be the best entry price? Chandan, your view?
Yeah, so I think if view is positional, can hold. Target is around 150.
Divya is holding 200 shares of Canara Bank, bought at a price of 148. Should she continue to hold, buy more for long term? Samir, any view?
It would just be a hold. I wouldn't buy more at this point.
Reliance Industries, from a next 5 months perspective, can our viewer continue to hold or exit at the current levels? Chandan, your view?
Yeah, can hold. 1300 is major support, and this time it can head towards 1600 to 1650.
Manas wants to know whether should he buy a Steel Authority of India, that is SAIL, at a current price. Any view, Samir?
So I'm not as positive on the metal counters from a long-term perspective because we've already seen a lot of run. So I would say avoid it for the long term.
Okay, Coforge is the next one. From a long-term perspective, can Mr. Menon continue to hold this counter? Samir, your view?
Yeah, like I said, the selling has been overdone. I think hold on to it.
Batuk Bhai from Thane is holding shares of Siemens Energy, 90 shares at a price of 2,949. Should he continue to hold this for the next 3 months, Chandan?
Yeah, we are positive on the power and energy counter, so he can hold this counter.
Okay, Mazagon Dock is the next one. Niket Garg, average buying price is 2548. Should I sell or hold from a medium to long term perspective? Samir, your view?
From a medium term, sell. From a 3-year perspective, hold.
Rajiv from Gurgaon is holding 500 shares of ITC Hotels, bought at a price of 256. Should he continue to hold this, Samir?
Yes, absolutely. Buy more.
Okay, Karnataka Bank, 200 shares bought at the levels of 216. It is not increasing. Will it going forward? Is this question, Chandan, your view?
Yeah, I think this time it can head higher, can hold with support of 195. It can head towards 225, 240.
Lavanya is holding 500 shares of Quality Power, bought at a price of 916. Samir, should she continue to hold this?
Sorry, no view on this counter.
Chandan, any view?
Qualifier, yeah, one can hold for target of 1000.
Okay, Karur Vaisya Bank is the next one. Geeta from Hindpur is asking whether she can continue to hold this. And if yes, for how long? Samir, your view?
Yeah, if you have a 3-year view, hold on. 1 year might be a little sluggish.
Ashwini from Chennai is holding 145 shares of M&M Finance, bought at a price of 383. Chandan, should she hold?
Yes, you can hold for target of 400, 420.
Precision Buyers, is this a good time to buy from a 3-month perspective, Chandan?
Yeah, can hold or buy.
Okay, all right. So that's the end of this rapid fire round. Of course, thank you so much, Chandan, as well as Samir, for helping us answer those queries. With that, we've exactly hit the 100 mark. That was the expectation that Puneet and I had. By the way, we did hit 100 yesterday as well. So it's not just the Somit record that we always do. But with that, completely out of time in this edition of Fast Profit. India market close up next. Do stay tuned.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
India tour in your city. Rug on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice.
The latest trends. It's a lot simpler. We'll help people make the right auto decision.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi guys, thanks so much for tuning in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia and Sharad Dubey. Guys, question for you. Have you ever walked into a movie theater and seen the trailer of a movie thinking that it's going to be absolutely fabulous, it's going to be a blockbuster, and then been completely disappointed by the end of the show?
Well,
Always.
I think
Always. Dhurandhar bhi dekh liya tumne?
धुरंधर का ट्रेलर भी अच्छा था, but movie was also good. But I'm just trying to remembering which was a disappointment.
You've not been disappointed. You're not
I was
experienced
disappointed with the timing of Dhurandhar to some extent.
Maybe
very long.
Might be a disappointment.
Okay, this is stretching too much. We're talking about the equity markets. Let's take a look at what we're speaking about. Because the markets have actually given up all of those early gains and you're seeing red on the screen. Obviously, this is a disappointment. This is something that you've seen consistently all through the week. Any shade of green is being sold into for the benchmark Nifty 50. We have broken and holding below that 25,500 mark, which we stayed above for quite a while today. Sharad, it's not
Alex,
a pretty
you're
picture.
right. Now I got the joke. It's a bit slow, but the trailer was yesterday. And
The trailer
movie
was yesterday.
nice.
All right, and let's take a look at the heat map for the Nifty 50 because really this is going to give you a sense of what is moving the needle today. There is significantly less green on the screen than there was at the start of trade. The green had actually stretched all the way to the second last line, but you have Tata Motors PV, you have a couple of other names in the healthcare space. You have Max Health, you have BEL, Aisha Motors doing okay, Sun Pharma, Adani Ports is okay. But on the bottom of the screen, you have Power Grid Corporation of India, CIL, NTPC, a couple of these PSEs that are not doing particularly well. Once again, Eternal makes its way to the bottom of the screen. Remember, it's lost quite a bit of ground in the recent past. If I remember correctly, yesterday it ended in the green, but broadly it's been a little bit of a downtick for this
and Alex,
company.
after a long time, I'm not seeing any IT stock over there.
Yeah, it's good news. So let's also pull up the sectoral indices to show you how this picture looks, and don't be surprised if there's more red on the screen. That indeed is the case. India defense is okay. I wonder where metal is. Can you spot metal? Metal is losing ground today, looks like. Right? So this is media, of course, but you have had metal that was one of the bright spots yesterday and day before yesterday.
It has turned flattish actually.
Is in the case today. So it's metal. Metal is just about flat in trade today. So what's working is defense, it's healthcare, it's pharma. Some of the defensives are doing okay, but everything else is looking a little wobbly.
Exactly, and I think the entire trade also, Alex, you mentioned the indices, that's also looking wobbly, and that's what the options data is suggesting. Let's pull out the key factors to watch out for currently. Yes, the Sensex monthly expiry is at play. You can expect volatility, and as we mentioned, the range-bound movement is there in the market. But if you have a longer time period frame, something like a medium-term setup, then as we discussed, this buy the dip strategy also might be working in. There's a minor adjustments which is going to be playing for Nifty Bank, so you can expect a little bit of movement. For this quarterly indices adjustment which happens, the mid caps are outperforming slightly the Nifty index, but overall if you look at the global macro specific, the risk on sentiment is still there. The AI trade is continuing, and we have seen risk on asset coming. FI supports is expected to continue going ahead. We are already below that 80% FI shorts mark, and we saw good buying also coming in from the FI, so that's something good. But European markets, they have opened mixed as of now. So largely we can see a little bit of consolidation kind of taking place in the market, but it's still wait and watch. Of course, that 200 DMA level of Nifty is still respected of 25,340. But Hiral, what are the stocks on your watch list today?
You know, Sharad, it's very interesting to see the kind of names that we have, because the problem is the volumes are good on these, but no major movements coming in. You have the likes of a Tata Motors PV, a strong volume buzzer in trade today, followed by a Shriram Finance, which has actually hit a 52-week high. Coal India, we are seeing some profit booking in today's session, and a Eternal, where the volumes are pretty strong. So that's from mainly the bigger names. If you talk about smaller names, Sanofi Consumer, on the back of a strong set of numbers along with the KSB, both of these counters are buzzing in trade. You have Jyoti Structures, which is in focus, which is trading at a 3-month high. Now, SpiceJet is very interesting because that rebound did start in the last hour of trade in yesterday's session, and that has continued in trade today as well after the block deal. Balu Forge has signed an accord with NATO, and that's what is keeping that stock afloat. A 663 crore block deal on Home First is why the stock is in focus. And Chola Finance has clarified that Valiant Subaya's exit is not something that is happening. He's pretty much back, going to be there as well. E2E Networks has launched a 130 crore QIP and a United Spirits. I mean, it's a Diageo lowering guidance impacting a United Spirits in trade. So these are the stocks that we're discussing in today's session, but let's get in. Samir Dalal and Rajesh Palvi of Axis Securities joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. Rajesh, my question to you is, for how long are you seeing this consolidation, this range to continue? Because that's what we've been talking about since quite a few days now.
Yeah, good afternoon, Hiral. Good afternoon, everyone. I think range is still defined by the market, like 24,000, 25,400 on the downside, and on the higher side, 25,800. This band is playing out since last couple of weeks, and we are not able to go beyond these levels on a weekly closing basis. Though we have crossed these ranges briefly, but most of the time market has consolidating in this range only since last 5-6 week, or we can say little longer period. Looking at the data in today's session, especially the put based concentration has shifted lower, as we have already broken 25,500 major put based concentration, and unwinding trade has been played out when we have broken this level. So now put base is shifted to 25,400, 25,300. And now we are almost closer to 200-day moving average, which is very crucial for this corrective move. So I think 25,350 is the crucial level based on the 200-day moving average. So that level needs to be protected by the market if at all Nifty has to show any kind of pullback from here. But looking at the other parameter in the market, like sectors where strength is clearly there, like sector like banking, automobile, even metal is also holding the strength. So these sectors are clearly showing that still, and pharma and healthcare is also started showing some sign of buying interest. So I think the shift is on the stock specific buying interest is there. Index is likely to remain in the range only. So I think one can focus on this sector where clearly these sectors are holding the strength, and most of the stocks from these sectors are trading about to their near-term, short-term moving averages. So I think one can find opportunity in these sectors. Bank Nifty is looking, comfortable. So we believe that banking stocks can continue further more strength.
Okay, let's very quickly, Rajesh, talk about the individual stocks that you're finding attractive at these levels.
So I think Eicher Motor one can look on. Here we can see again good traction, and stock is again trading near to day high. Almost it's at all-time high trajectory. We are projecting target of 8250, 8300. On the downside, 8030 needs to keep as a stop loss. Another stock where we are focusing is from the pharma space, that is Dr. Reddy. A very strong rebound from the lower level, and on the weekly chart, stock has already broken its falling channel. And looking at the structure, we hold our bullish view, and we feel that stock has potential to extend gain towards 1360, 1370. So one can buy with stop loss of 1290.
Okay, allow me, Samir, to come back to you on what we've called today the stock of the day, and this is on the back of earnings. Sanofi reacting quite sharply, right? And Mahima joining in to tell you about why that is. She'll set the context, and then we'll go across to Samir to find out what he has to say about the earnings that have come through. 16% right now on the charts for Sanofi Consumer. Mahima, what stands out here?
Right. So, Alex, in terms of the key highlights, I think the first one being that this is the second consecutive quarter where the company has registered a 40% growth in terms of its top line. So, two consecutive quarters where it has been a good growth. Before that, also the company has been growing at that rate of 20-odd%. Sustained growth momentum has been seen across its key business segments. Overall, domestic sales has seen a growth of around 23%, and exports did see a growth of around 9.3%. Of course, 9.3 times, and this is on the back of a lower base as well, but good growth coming in from both domestic as well as export side. Now, in terms of where the numbers go, revenue did see an uptick of around 47%, EBITDA an uptick of around 44%, margins stood at 35.8% versus that of 36.5%, so slight downtick in terms of margins. This is, I think, largely on account of the increase in terms of raw material prices that we saw. In terms of the net profit, it did see a growth of around 50-odd%. The growth for the bottom bottom line did come in from largely three expense cores. The first one being stock in trade, which got reduced by around 67%, depreciation, which got reduced by around 2.4 times, and other expenses, which saw a reduction of around 47%. So this is the overall view as to how the numbers have panned out for Sanofi Consumer and why the stock is up in trade today.
Okay, so that's with regards to where Sanofi Consumer goes. Samir, any quick view, because the numbers are pretty strong. The stock seeing gains of little over 16%. We will talk about the other pharma stocks as well in a bit, but a view on a Sanofi.
Unfortunately, I don't have a view on Sanofi, so I'm really sorry.
Okay. Rajesh, anything on the charts?
The stock was in downtrend, but today's move is very interesting, and now stock is managed to cross 20-50-day moving average. So it's a very sharp run up. So I think if any cool off effect comes and the stock comes around 4,500 would be again level where one can buy with stop loss of 44.50. On the higher side, possible up move towards 4,800, 4,850 we may see again once the stock retrace little bit from the current level.
So that's Sanofi Consumer, but staying with the pharma pack, Zydus is another one where they've said that they will be launching generic semaglutide injections in India, and this is after the patent that expires in March 2026. In fact, a couple of brand names that they're planning to launch the drug under. This will be a single adjustable pen which will let patients select different doses, and this would actually lower costs as well. And they would hold exclusivity rights when it comes to reusable pens with pre-filled cartridges. So that stock is up in trade. Apart from that, a negative news coming in for Dr. Reddy's, where DAM Capital has said that Sandoz does not give any specific guidance on semaglutide launch in Canada, and they're looking for a potential launch in the second half of calendar year 2026. Now, semaglutide approvals or launches in Canada and Brazil could be delayed versus the current guidance that we had of the first half of 2026 that was given by Dr. Reddy. So this is something which could be negative when it comes to Dr. Reddy's. And we've already spoken about Biocon, which have got the approval in terms of I forgot the name, but one of the other GLP-1 drugs as well. Liraglutide, correct. That was liraglutide, semaglutide, and there is one more, liraglutide. Okay. So that's the entire GLP-1 portfolio. Apart from this, Aurobindo is another pharma stock which is in focus as well, because Eugia has won the US FDA approval for liver transplant drug, and the product is expected to come in the first quarter of FY26. So pharma, a lot of news brewing, but leaving aside Aurobindo right now, if you have to look at the other names from the GLP-1 portfolio. Samir, any views coming in there? Because the conversation right now is the kind of pricing pressure generics could face once they come into the market, because your innovators have already started dropping prices, and two, scaling up is going to be a concern with the kind of volumes that they need to produce.
Okay, so to answer the second part first, I don't think scaling up for any of these companies is going to be a very, very difficult task when it comes to it, right? Now the question comes is, what you rightfully said is that the pricing pressures are coming. But if you look at any drug that has been there, which is a new discovery, which comes off patent over a period of time, the prices fall, the market shrinks. So there was a particular drug about 4 or 5 years ago, which was about $2 billion size in the US, which is now about, I can't remember the name of the drug, but it's become $150 million size, right? The market size. So once the generics come into the picture, the market size shrinks. So I mean, just to assume that this kind of profitability will continue endlessly, I think that was a bit over expected. But you got to also look at it that that's not the only drug that they're making, right? They have multiple products, multiple product profile, new launches expected over a period of time. This is just one or two of them. So if you work on the oncology side, if you look at the kind of research that's going in, I think there's an opportunity. So for me, pharma is not dead. I wouldn't be too worried about this one medicine that is going off patent where pricing will come down and, all of those things. You look at the entire basket of products, I think the opportunity is still very large. Indian pharma in the US is generic based, and the more markets that we are able to capture leads to direct profitability growth, because it means operating leverage kicks through. And if you look at the gross margins, even of generic drugs, they are as high as 80-85%. So I don't think there's any problem when it comes to that. So for me, positive on pharma. The stock which I am very positive on at this point of time in the Blue chip is of course Sun Pharma, followed by Lupin and Dr. Reddy. And in the mid cap, I think Torrent Pharma is something that's looking very attractive, though they have very limited US exposure. I think that will increase over time and the profits will start.
These are the important picks coming in from Samir, but let's also listen into what Bicon's management had to say, and also we'll take the view of Vishal Manchandana from Systematics Shares and Stocks.
So we are, you just received the approval yesterday, and now we are preparing for the launch. We of course had a back order for supplies in Europe, but for the US, we are expecting that within the next 30 to 45 days, we should be able to launch the product.
So markets are going to expand multifold as the price points come down. So my sense is like we have about 20-25 million people using GLP-1 pens in US and Europe. So like if we have even half of those patients using GLP-1 pens in India, so we have a similar population size like the US and Europe put together. So even then the market is going to be very large, maybe in excess of 10,000 crores, and even after assuming a substantial discount to the current prices.
All right, but let's just look at the F&O developments which are happening, and we had pointed out earlier when we discussed with Alex and Hiral about the options data. It was suggesting a range-bound move, but a little minor spike has happened for Nifty and Nifty Bank as well. But let's look at the stocks which should be in focus. Mankind Pharma, long build-up coming in. Almost stock is up 6%. A good institutional flow. Tube Investments also making it to the list. That's also up almost 4%. Looking at the short covering candidates, this of course includes Oracle Financial Services. This is also the top gainer in the Nifty IT index. Remember the flow which we saw in the short covering in IT, that has actually come down, and a lot of IT stocks are in green, but towards the, you could say, the same similar levels. But IDFC First Bank, that's up almost 4% and good buying coming in. And if you look at the long unwinding, not a major important trade which would come in like a Samman Capital, but yes, LIC Housing Finance, that's also down. Let's look at the key shorts which is being developed in the system. In the F&O space, Dixon Tech, that's down 2%, and even Muthoot Finance, they also make it to the list. Rajesh, I want to get you on this, especially on the short build-up on Dixon Tech. Street is fearing that some more sell-off can happen. Can you just give us a little bit of stop losses for this segment?
Yeah, so Dixon Tech is clearly in downtrend, and a series of lower top, lower bottom formation is taking place. In this process, stock is now trading below 250-day, 20-day moving average, and stock is now approaching towards its Feb 2026 swing low. So I think 10,000 is the crucial level for Dixon Tech on the downside. If it's break that level also, I think a fall can extend further, and possibly 9,800 would be the next level where stock can continue its down move. Those who are already on the short side of trade can carry their short position with stop loss of 10,500.
Got it. All right. On that note, it's time to go to our regular segment, which had gotten curtailed for a short while because Somit wasn't here. It is Heard on the Street, and Somit is back to tell you about what the buzz is from the dealing room. Somit, there's a lot of stock-specific action, but it's pretty dull on the index level.
Well, yes, pretty much dull day of trade that we are looking at. But volume action continues to be there, even in few stocks that we are counting on. Firstly, when it comes to Bandhan Bank, what dealers are indicating is that there are buy flows on institutional desk. Dealers indicate that the management has given strong commentary to few of the institutional investors whom they met, and dealers are expecting now the fourth quarter to be quite strong, and hence even in a dull day, the stock at one point of time was up as much as 3% in trade. When it comes to Coal India, the stock is down in trade. Dealers are indicating that the Feb 2026 volume numbers could be weak, despite the fact that the base number is also on the weaker side. Despite that, there could be a drop in volumes is what dealers have indicated. In fact, they're expecting volumes to drop by nearly 2 to 3% on a YY basis. For GMR Airports, dealers are expecting a block deal to happen very soon. For HUL, multiple dealing rooms are indicating or recommending a sell call to their clients. So keep an eye out for HUL as well in trade. And lastly, when it comes to RBL Bank, there are buy flows on FI desk. Large foreign investors have been buying in trade, and even delivery volumes are expected to be on the higher side. So keep an eye out for RBL Bank as well.
Thanks a lot, Somit, for that. But let's just pull out both the charts of RBL Bank and Bandhan Bank. It's of course a trader's favorite stock, and these stocks buzz a lot on flows. If you could just show both RBL Bank and Bandhan Bank, both of them on the intraday charts. Rajesh, out of these two stocks, on a very short-term basis, which one is looking better right now?
So if I have to select one, so then I'll go with the Bandhan Bank. Though fresh buying interest has been seen in this counter, and this is the 5th consecutive week where stock is making higher high low formation, and now stock is negotiating with its July 2025 swing high. Looking at the formation, we believe that there could be a higher possibility of breakout of this consolidation range. I think 192 is the important level to watch for. If it's break, then possible target towards 220 we may see on the positional perspective. So Bandhan Bank, one can buy and accumulate. On the downside, the 180 needs to keep as a stop loss.
That's with regards to a Bandhan Bank. In fact, the move in terms of Bandhan Bank also is very interesting in the last couple of months. If you just pull up a 1-year chart, and you'll see the kind of gains that have come in on this counter. If it's actually corrected, I think it's a 7-month or no, from December to February, a strong surge that has come in after that correction that it saw in the past. So there is some bit of interest that's coming back on this counter. But moving from here, if you see in terms of couple of stocks that should be on our rapid fire segment now. Rajesh, quick views. Tata Motors PV, again a strong volume buzzer. In fact, we've been looking at Tata Motors CV as a play where the valuations are expensive, but still it seems there is no stopping. But what about a PV?
So one can buy at current level. Fresh breakout is there. So I think 410 would be the next target.
Okay. How about a Shriram Finance? It was one of the stocks which saw a good run up. If you see in the last couple of months, do you see that surge to continue?
Yeah, very strong structure across all time frame. Yes, one can continue to hold this stock. I think 1150, 1200 would be the next target.
Okay. How about a Coal India? Because now it's started to see some bit of profit booking after a good 1 month.
I think still stock is holding the breakout of a 6-month consolidation range. I think 425 needs to keep as a stop loss. Possible target towards 445 we may see on a positional perspective.
Okay. You have Eternal also, which has been seeing pressure. And if you see in terms of this stock, there has been a block deal. The volumes are also very strong in today's session. Last couple of days, weakness has continued.
I think it's a short candidate. One can remain on the short side of trade with stop loss of 255. On the downside, possible target of 240, 235 we may see.
How much further pressure, Rajesh, a follow up on this one are you seeing on Eternal in case it breaches the lower levels as well?
I think it has already broken its previous swing low of 252. So I think if it's remain below to 252, possible 235 would be the next level to watch for in this downfall.
Okay, and very lastly, Jyoti Structures.
I think one can avoid at this juncture, though stock has shown some pullback, but still 15 would be the major hurdle to cross.
I do want to ask about RVNL. Pull up the chart as we're speaking about it, because at about 230 or 235 or thereabouts, you've seen an order win that has come through, and you see the kind of jump that the stock has taken. It's a pretty sizable order, 645 odd crore rupees from NMDC. This is for the construction order, or rather it's for construction that will take place in Chhattisgarh. We'll get you more details on that. Let me quickly go across to Samir. Samir, RVNL and a couple of these other players in the railway space, would you say that the tide is finally turning, that you've seen a few more orders come through, that you would want to see that earnings trajectory pick up, of course, but is this a sign of things turning in your opinion?
Well, we'd hope it's signs of things turning, right? The entire railway space, what had happened is the valuations had probably gone way out of whack back in the day. Stocks had run up significantly. But if you look at even RVNL as of today, it's still trading at about 50 times forward earnings, which is a bit on the pricey side, right? So, of course, orders coming through will be good because that means that you could probably get a higher turnover, operating leverages playing out. But valuations are still expensive. So you have to be a little more selective in the railway space, I think. So I would look at companies that are catering to the wagon side. I think there's more of an opportunity. So Texmaco Rail, Titagra Rail, those I think have a better opportunity of growth I mean, not growth, but better valuation comfort plus growth given the kind of expansion that's happening. So that is where I'd be focused more. Yes, these order flows are positive, and you'll see these 1 day, 2 day spikes, but then what? Everyone still eventually looks at fundamentals, and if the valuations are not justifiable, the stocks come off. So for me, RVNL at this point is still an avoid. Look at if you want the rail space, top pick in that space right now for us is Titagra Rail Wagons.
All right, but let's move on to the commercial vehicle segment. These stocks have surged around 40% since mid-November, raising questions on stretched valuations. Brokers like HSBC, Nomura and even Ambit still see value, backing names such as Tata Motors CV with buy ratings and higher targets. And as the demand and the CV upcycle gains traction, we get in more details. Mahima is there with much more on this and the valuation story of the CV space. Over to you, Mahima.
Right. So, Shah, the question really here is that after the kind of run-up that we've seen in all these commercial vehicle players, almost a 40% upside is what we've seen in a lot of these names. Are valuations stretched because forward-looking statements from company as well as brokerage's view, suggest the other way around, right? In terms of where the returns go since 12th November, because that's when Tata Motors CV got listed, Ashok Leyland has given a return of 48%, Tata Motors CV of 56%. Of course, this is the merger effect as well. The Nifty Auto has overall seen a growth of around 3.5% versus that of Nifty 50 seeing a degrowth of around 1.5%. Now, what has led to this stock price outperformance? GST rate cuts led to buyers sitting, overall on the sidelines before, of course, the GST rate cut, and then the inflow of orders coming in for all of these companies. Ashok Leyland, in terms of Q3 numbers, Ashok Leyland saw an uptick of 24% in terms of its total units. Even in terms of Tata Motors CV, the uptick was around 20% wholesale. MHCV also saw a market share at 47% for Tata Motors and 32% for Ashok Leyland. In terms of why these players could still have some leg of growth, first one being that the high average age of trucks is at 10 years versus that on a normal age of around 7 years. So overall, fleet operators will need to eventually replace the age-old trucks. Ashok Leyland in its con call did say that to go back to 8 years fleet age would also take a few years. Secondly, onset of quick commerce has led to more demand in terms of these trucks. Thirdly, export currently just is around about 7% of the total commercial vehicles, total LCV sales. So that has a huge scope of improvement and growth from here on. And other avenues of growth like buses will be another trigger as well. In terms of where brokerage's view go, Nomura believes that there is still early stage of CV upcycle. Volumes are yet to cross the FY19 peak. FY27 industry growth can be much stronger if economic growth picks up, and expects strong 18% EPS CAGR between FY26 to 28. Nomura sees an EPS estimate for Tata Motors well ahead of consensus by around 12% in FY27 and 11% in FY28. Lastly, common analyst views, there's benign commodity prices, lower discounts and operating leverage that should offer margin tailwinds from here on. And in terms of buy calls, Ashok Leyland at 61% upside and Tata Motors CV at 87% upside. Valuations still trade between 11 to 13 times EV to EBITDA in line with the historical average. So this is the overall view of what the scenario is looking like in terms of where the commercial vehicles go.
Thanks a lot, Mahima, for that. Rajesh, to just get you on this, it's a good time to book a little bit of profits if somebody is already invested in the company for both Ashok Leyland and even Tata Motors CV. Your views on that?
So if I look at all these three stocks, Ashok Leyland still in the uptrend, and stock is holding strength on the near-term, short-term chart, and we have seen very strong run-up in this counter, especially in last couple of years. Stock is clearly in uptrend. So I think for Ashok Leyland, my advice would be to trail your stop loss around 200 level. If it's break 200, then only exit. Otherwise, I think carry your position as overall structure is bullish, and I think in this kind of volatility also stock is trying to hold the strength on the near-term chart. So this stock has potential to extend gain towards 240, 250 also going forward. but follow the stop loss of 200 if you are on the long side of trade. But Tata Motor commercial vehicle still, if we analyze on the short to medium term structure, stock is consolidating at this juncture. So here also strength is there, but follow the stop loss of 470 if you are on the long side of trade. If it's not break below 470, I think you may continue with your long position.
I just want to get you also on this. The CV upcycle, when it starts, it's not just a 1 year, 2 year story. How long is this story? And if that story plays out, who will benefit the most here?
Yeah, absolutely. If the story plays out, it will be a long-term growth story. But the point remains is that, we've seen this one bump up that has also come because of these GST cuts. Now, the question is, can that momentum continue in Q4 and Q1 of next year? So we need to see that before we assume that the trend has changed. Because honestly, if you ask me on the ground level, I mean, if you look at industries, I don't see that much growth happening. So then eventually the demand for trucks may also start coming down. Apart from the replacement demand, fresh demand for expansion of fleets may not be as strong. So for me, I want to see continued growth. Stocks have run up quite a bit. And your question, which you had actually posed before, should you book some profit? So my view is slightly different. I feel a little bit of profit booking is warranted at these levels. You may get an opportunity to get these stocks 20-25% lower if something misses on the growth because it's priced to maybe perfection to slightly overvalued at this point. Now, when it continues, if the growth momentum continues for the next, if the economic cycle uptick happens and real estate, cement, industries all do well, then I'm sure these trucking companies these commercial vehicle companies will do really well going forward and the stocks can move up further over the next 3 years. But the upside potential will get muted down to anywhere between 8 to 10%. And that is not great when you look at it from a 3-year perspective of a CAGR return of 10%.
All right, so a little bit of profit booking can be there for both these counters. But let's take a short break. But before that, let's listen in from Nikhil Malavarapu. He's the joint MD at Sentum Electronics, who says company is expecting a growth guidance of 25 to 30% in the upcoming quarters following their big order deal with HAL. Listen in.
At the end of Q3, our order book was close to around 1,800 crores. That includes all different parts of the business for us. This quarter, apart from, of course, this significant order, we are expecting some other important opportunities to also come in Q4 that's related to space-based orders, as well as a few other critical programs that we've been working on. So we expect, and I'm only considering the phase one part of what we talked about of the program. So which is about 70 crores. So we expect our order book to further go up in Q4, a fair amount. And again, like I said, will give us a fairly strong visibility to continue a healthy growth rate going forward of 25 to 30%.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
All
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right order decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of
Welcome back to India Market Close on NDTV Profit. Now, defense as a pack is in focus in today's session, and this is on the back of Prime Minister Narendra Modi's visit to Israel. The conversation over here is, what are the defense ties going to look like? Because there are partnerships which are already in place, so there could be some enhancements happening on that front as well. Newer partnerships and collaborations could be discussed. Let's see what is on the cards. Where are we already in terms of India-Israel defense partnerships? What is the expectation and what could be in store, and the companies that benefit out of it? If you see the index as well, that is at the day's highest level. So there is something brewing on that front. Mahima gets us all the nitty-gritties and the details that one should be watching out for. Mahima, what do you have for us?
Right, Hiral. So over a period of time, we've seen India and Israel partnerships, evolving in terms of where defense goes. And from just a buyer-seller relationship, it has, further deepened and has become a multi-faceted strategic alliance. In terms of partnership that is going to focus on co-development as well as co-production, India is Israel's largest defense customer. India accounts for did account for 34% of Israel's total defense exports between 2020 to 2024, and in 2026 the bilateral defense collaboration has reached around $8.6 billion. This is early in 2026. In terms of where the ties goes, the partnerships in terms of different segments, in the air and missile defense, there is Barrack 8, plus there is flagship joint development between DRDO as well as IAI. For drones, that is UAVs, extensive use of Heron TP, Searcher, Hermes 900 UAVs, plus Drishti Trends Starliner produced in Hyderabad via JV with Elbit system is in place. There is also loitering munitions that India uses, and that includes kamikaze drones as well. In terms of where the precision strike system goes, there is already partnership in place where, of course, India has recently approved $8.7 billion package. Spice 100 guided bombs, Rampage air-to-surface missiles, and Air LoRa ballistic missiles. These are, the offerings that are already in place. In terms of where the joint venture ties goes, major Israeli firms like IAI as well as Elbit as well as Rafale have JVs with Indian giants. Now, company names where there have been JVs or partnerships include counters like Adani Defence and Aerospace, Bharat Forge, you have Tata Advanced Systems, Mahindra Defence, Larsen & Toubro, HAL, BEL as well as Bharat Dynamics. In terms of where treaties goes, 10-year roadmap for AI, cyber security as well as quantum computing is in place. Bilateral investment treaty signed in September 2025 aimed at turbocharging as well as defense investments. In terms of where the other ties goes for missiles and bombs, there's key systems that include Spice 2000 guided bombs, Spike anti-tank missiles, as well as Rampage air-to-surface missiles. For surveillance, India uses there's Israeli Falcon AWACS advanced radar systems. And lastly, in terms of where strategic manufacturing hub go, there is Adani Elbit advanced systems, in place. There's PLR systems as well as there's Kalyani Rafale advanced systems. In terms of emerging technologies, what we'll be looking at, there is anti-ballistic missiles in defense, laser weapons as well as Golden Horizon missile, and cyber security as well as AI. So these are the aspects that we'll be looking at in terms of where emerging technologies goes. But this is the overall view as to how the partnership and ties have been between India and Israel in terms of where defense goes.
Okay, very interesting and quite the prospects there. Thanks so much, Mahima, for that. We're joined, I believe, by Vineet Bolinjkar, who's the head of research at Ventura Securities. Vineet, thanks so much for taking the time and good afternoon to you. I hope that you heard what my colleague Mahima just listed out about the prospects for Indian companies amidst this tie-up with Israel. But even beyond that, my question to you is, how do you view the Indian defense pack if you're talking about transfer of technology from overseas to India, especially at a time when India is signing so many bilateral agreements?
So basically, I think it is going to be one of those secular stories which is going to really, really augment the Indian industry. I believe that, it is on cusp of a multi-decadal growth story. It can be double digit because we are not talking only of about, rearming the Indian defense pact, but we are also talking of exploring and selling to the world. I think Europe and the India tie-up that has happened is fantastic. We've got very strong relationships with the Russia and now with Israel. So I think these are the largest exporters and ammunition, deployers, providers, etc. So I think India stands very well to benefit from this. I think there is a lot of focus that is going to come not only on capital equipment, but also on consumables. So I think it's a secular growth story which is going to play out in double digits over the next foreseeable decade, I think.
A decade story. That's what Vineet is talking about. But let's move on to the rapid fire part 2 for India Market Close. Rajesh, you know the drill. We'll start first one. SpiceJet, the stock has rebounded in trade volumes at 3 times its 20-day average. Your views on that?
I think try to exit in this pullback. Stock structure is weak.
Okay. Balu Forge, they have signed an accord with NATO and the volumes are also at 4 times its 20-day average.
So 510 is the resistance. So if its stocks comes around those level, exit.
And Home First, it's in focus on the back of a block deal. Stock is down almost 4%, almost 5% now. What's your take on that?
Stock is at multiple support area of 1150. So those who are already on the long side of trade follow a stop loss of 1150.
And Rajesh, the next stock, E2E Networks, they have launched a 130 crore QIP.
Okay, so I think hold the position. At this juncture, I think 2480 would be your stop loss.
And Aditya Infotech, the block buyers include Abu Dhabi Investment Authority and Kedara Capital. Of course, yesterday there was a big block. but absorption seems strong.
Yeah, I think one can hold the position. 1480 needs to keep as a stop loss.
All right, so this is the end of the rapid fire and interesting picks coming in. But Aditya Infotech is something which is pretty much interesting on the surveillance theme. I just want to take this stock and get Vineet also in this. Vineet, if you could just give us the entire picture of this surveillance theme that has also picked up, and Aditya Infotech, the brand is called CP Plus. So your take on this entire theme?
So, we don't track Aditya Infotech, but surveillance is obviously going to be the, natural growth story emanating from, wanting to, track the markets, where individual investors are being tracked. And, that is a larger growth story also in the states of America, where, there's a lot of, security related ante coming up. So I think to that extent it will do well, but since we don't track it, cannot provide you much information on that.
Actually, ask a slightly broader question, Vineet. Since I'm speaking to you after a short while, the question is, at this moment, you're seeing quite a bit of consolidation, and any rise is being sold into. The point is that this worry on tariffs seems to be affecting AI, seems to be affecting IT. From gains of about 1.5%, it's up only about 0.1% right now, the index level. What do you think it'll take for a sustained up move? Is it going to be the fourth quarter earnings that we'll only see starting April?
So, there are a couple of things that I would like the street to address. One is that, when you replace software development revenues with AI, can you also expedite growth? Because, replacement and, getting newer business are two other things. So keeping that in mind, I think those are the two things that we would like the management to walk the talk after their quarterly numbers are out. And till then, we continue to remain skeptical on the growth story. Right now, valuations are comfortable. Some are in the reasonable valuation category, but there is no mojo in the stocks because of the lack of growth.
Sure. In your category, the mid-cap space, the Persistence and the Coforge, once they were street favorites, but they had a good kind of sell-off within the last 2 days. They're trying to normalize any kind of, a positional setup which is looking good or you would like to avoid in the mid-cap IT space. Your views on that, Rajesh?
No, I think at this juncture, I'll say avoid at this juncture. We have seen a damage in the near-term, short-term structure for most of the large-cap and mid-cap IT space, though there is some pullback action in some of the pockets, but still looking at the overall structure for Nifty IT also, we hold at this juncture cautious view as there is no as such sign of recovery despite of most of the stocks are in oversold trajectory. So maybe we could see some more follow-up selling in these counters. So minor pullback should be used as an exit opportunity at this juncture.
Minor pullback means exit opportunities for IT stocks, but AI has been impacting all the IT stocks. There have been reports coming in. There was a Citrini report, but now an antidote has come in, and that's giving a different viewpoint. So I'm going to get both of them. And of course, we have got that through AI. But I'm going to give you the first reason. That's the document type. Citrini Research, that's for 2028. They have, you could say, a speculative post-mortem kind of a setup in their report. But look at the quantitative rebuttal, which is coming in from Citadel Securities. Another important trigger would be the macro stance. What's the macro stance for Citadel Securities? It's techno-optimistic. That means AI is augmenting the economy. But on the other hand, Citrini Research, a bull case, it won't be, it's a bear case. The techni-pessimist, that's the name which is coming in, and AI is breaking the economy. So that's a bit negative. That's what was spooking the IT stocks. Citadel Security comes up with a very new concept on the primary. This is the execution lag. That means the overvaluation could be there of the AI speed. And in the case of Citrini Research, they have stated this is something called ghost GDP. That means high output and zero demand. So, of course, this is, you could say, negative coming from both the sides. Labor outcome, Citadel Security says there's going to be a net job creation. That means new service classes will be coming in and you should start training yourself on AI. That's what they're trying to say. But Citadel Research has a different viewpoint. They're stating 10% plus unemployment would be there and the white collar will be collapsing. Let's talk about another key category, that's the capital flow. Citadel Securities, they say reinvestment would be there of the surplus into the new ventures. But on the other hand, for Citrini, they say the profit hoarding would be there by non-consuming AI agents. That means the profits will be taken by the agents. That's pretty much interesting. S&P 500 view, how does it actually stack out? Citadel Security says it's a steady growth backed by margin expansion. That's the bullish view coming in. But on the bearish side, there is a terminal decline from 8,000 to near 5,000. These are the levels we are talking about S&P 500. Also, the key metric to actually track when we are seeing both of these reports, the first one is, of course, the substitution elasticity, the friction of change which comes in. That's on the positive side. But on the negative side, it's the consumption velocity. That's almost 70% of the GDP which can be impacted. So you can see how much key criteria are there. Two different stories are there. But it's pretty much interesting. One comes scaring the IT pack, another comes actually giving some hope to the financial pack. So this is where the AI versus bull versus bear scenario comes in.
Very interesting. I wonder what Vineet makes of this entire argument. There has been, of course, this argument of increased productivity and a churn, not necessarily a loss of jobs. But where in this whole argument, when it comes to India's listed space, do you come up on? Vineet, that was for you.
Can you repeat the question and can you be a little louder because I'm losing the volume?
Okay, so you've obviously not been able to then listen to Sharad's entire argument between the bull case and the bear case in the AI space. But the jury's out. So some people are suggesting that this is a bit of a bubble and that the implications of the adoption of artificial intelligence are overblown. Other people are saying that it cannot be ignored at all. And they're saying that productivity improvement will result in an improvement in margins for companies here in India as well. Where do you stand in that argument and which stocks do you like based on this argument?
So, couple of things that we need to address is the fact that, in the international markets, job cuts are a result of AI implementation. That is also very true in the IT space that is happening out here. And we have to understand whether, the job cuts and the cost savings that are coming out of that offset due to implementation of AI is resulting in better margins for the consumers, for the clients. So to that extent, I think that, it will have to be passed on. And as I said, we will have to see a significant churn happening where the revenue trajectory stabilizes and then starts picking up. So until that point where, the sales growth does not come in, I don't think that there will be enough buyers for the growth story. And, we will progressively get sold out. So I'm watching the next couple of quarters very critically. And from a negative opinion on the last 2 years on the stocks, we have somewhat moved to marginally neutral and actively tracking this space. So right now, no favorites on which stocks to buy.
Watch and wait is the view. Let me go across to Rajesh for a quick view on whether there are any BTST ideas, because let's face it, it's a quiet day, dull day on the index level, but there must be some stocks that you're looking at.
Yeah, definitely. Many stocks are showing sign of strength, and I think healthcare space where one can focus on for BTST. Fortis managed to view breakout. So here we are holding bullish view and looking at the breakout. We expect that, Fortis can extend gain. 975, 985 is the target for BTST. On the downside, 950 needs to keep as a stop loss. Another stock where one can go with a BTST is IndusInd Bank, very strong breakout of multiple supply zone. And looking at the banking stocks also, we hold bullish view for banking sector at this juncture. So IndusInd Bank, one can go for BTST, 985, 990 is the target. On the downside, 955 needs to keep as a stop loss.
Okay, so that's with regards to where the BTST, STBT calls go. But there are a couple of other newsmakers that we need to discuss as well. Let Jasmeet take us through the list quickly. Jasmeet, over to you.
Well, thank you for that, Hiral. First one on my list is KSB. Well, this company stock is buzzing on the back of the earnings which the company saw. If you see the overall growth, we see a broad-based growth coming in, and the revenue for the particular quarter was led by the overall pump segment, and even the valves saw a good growth of 2.5%. If you look at the key numbers, the revenues of 7.9%, while the EBITDA is up 31%, and margins saw a big jump of 300 basis points in this particular quarter. Further, the net profit also saw an uptick of 11%, and the stock is buzzing in the same regards. Well, the second stock is Shell Engineering. Well, the company gets an order worth ₹423 crore for supplying of pen injectors for the pharma companies, and we also have a brokerage that came out with a brokerage on the similar order. What they say is they have maintained a stance buy with a target price of 4,000, while they say this order creates an overall momentum when it comes to semaglutide segment of the company. While if the next one is Diamond Power Infra, well, the company received LOI from KP Green Energies worth ₹93 crore, the order for supply of overall power cables, and this is to be executed by the month of June. Now, lastly, I also have Jindal Poly. Well, this is a bit interesting one, given that NCLT dismisses company's plea which the company had filed against NCLT admission. Earlier, NCLT had put allegations against the company for the promoter buying undervalued transaction, and this is one of the first such suits that India has ever seen.
Interesting. The stock is actually down about 6.4%. Thanks so much, Jasmeet, for getting us those details. I'm talking about Jindal Poly Films. The stock is about 2,700 crore rupees of market capitalization. Let's pull up the right chart and see where it is right now. It's 6.4% down. What you saw on the screen there was KSB. Any chance, Vineet, you've looked at this case? Because this is a situation where minority shareholders had a class action suit that they filed. This is not something that you've seen in India ever. It's something that you often see in the US. And they've actually alleged that there has been an undervaluing of transactions, related party transactions, going back several years. They've studied something that has taken place over the course of the last decade, and they've alleged that there is significant loss of value that has taken place. So, have you looked at this company, and are you familiar with the case?
So, leaving aside the corporate governance issue, I think the company is on a very good wicket. You're talking about KSH, right?
Jindal Poly Films.
No, I won't comment on Jindal Poly Films because we have not discussed this extensively. We haven't looked at it too much.
Right, let's just pull out the exchange stocks, BSE, CDSL, and even the broking stocks. Important commentary coming in from Bloomberg and NSE MD and CEO Ashish Chauhan has stated that the F&O volumes might be impacted on the lower side from April onwards as that STT, rise in STT comes in, and we're seeing a big dip coming in from the day's high for BSE. And just point out Angel One and Motilal Oswal as well, all the broking stocks, to give in the feel that the capital stocks, are they actually seeing a sell-off, but not so much reaction coming in the broking stocks.
It's mainly coming in on a BSE for some reason, why that sharp correction coming in there. I think that should be a conversation point right now.
Exactly. And Rajesh, your view on BSE, the stock itself is reacting to this important statement coming in. Your views on the technical charts?
So I think stock is still struggling to cross its 20-day moving average supply area. Since last couple of attempts almost failed to cross this level. Until the stock not crosses about 2850, 2900, I think the trend is likely to remain on the sideways consolidation. If stocks breaks below 2700 level, then we may see some more liquidation in this counter, and then stock can correct further. But I think till 2700 is intact, we may see a range bound activity in 100 rupees band for next couple of days.
That comment is very interesting that's coming in as well, with Ashish Chauhan mentioning about what is the need of the hour when it comes to the F&O side of business. I think that's what is creating that kind of a panic downtick in terms of BSE as a stock right now. It turned red, but pretty much on the borderline as we speak. Let's quickly pull up a United Spirits on the screens, because Diageo has come out and given out a slight bit of a warning. They've cut their guidance as well, and that's what is putting pressure on this one. The parent of United Spirits fell 13%. The company has lowered its 2026 sales, profit and dividend outlook, and they've said that organic sales will be 2 to 3% lower. Your operating profit is expected to be flat as well, and weaker North America demand in China has affected earnings. Management, however, said that they did note strong performance in India. So India business is strong. So potentially you may not see a major impact on your domestic-oriented alcohol companies. That's what I could read between the lines as well, apart from the impact on United Spirits. And double-digit growth was mainly driven by prestige and above. They've highlighted resuming of Andhra operations that will augur growth. And the CFO confirmed consideration of a stake sale in RCB, and that's something which has been doing rounds pretty strongly over the last couple of months. Vineet, any view when it comes to United Spirits and the other, alcohol companies? Because along with this one, you have a Sula also, which has been ruling under pressure.
So we are quite constructive on this space, and we think that Tilak Nagar is one stock which deserves attention. I think their recent acquisition provides a lot of room for growth. And so we are quite convinced on this stock idea.
Okay. So that's with regards to where alcohol companies go. A quick view, Rajesh. Anything on the Tilak Nagar Industries, United Spirits, United Breweries, Sula? You like anything on the charts?
I think United Spirit is still in the consolidation zone only. There is no movement since last couple of months in this counter. It's in range only. So if I go with other stocks also, most of the stocks are consolidating only. So I think some more consolidation is likely to be there, as there is no as such strength on the near-term chart. So I think for trader, it should avoid.
Void call coming in for United Spirits right now. Thanks a lot, Rajesh and Vineet, both of you, for giving your time for both technical and fundamental perspectives on the stocks and the markets. But coming back on the closing, of course, the Sensex monthly expiry is also at play, but markets largely expected to end flat. There was some volatility in the day's trade, but nevertheless, a little bit of short covering was definitely there in the IT pack, but then there was a slight reduction towards the end. Largely flattish, but that above that 200 DMA level, that's what we are looking at, and that has been good. What's doing really well is, of course, the Nifty Bank technical setup is still better than Nifty. And look at the advanced decline ratio for the second straight day. Let's show the mid cap and the small cap indices also, how they have performed. And lastly, I can say for the second straight day, the value buying is there. That means the breadth is improving. That's a good sign. Maybe the benchmark indices might not show you that much picture of the entire market, but the breadth is improving, and that is something which we will take it. Also, let's pull out the main stocks in the Nifty 50 index to show you what's happening there. And the key heavyweights, of course, the green have come up from last time in the last 1 hour. Reliance, TCS in the green, Tata Motors, PV, Eicher Motors doing well in trade, BL also seeing a 2% up move, and some kind of a selling definitely happening. HDFC Bank, that's a bit of concern, is down more than 1%, but Coal India, Eternal and Trend, these are the top losers in the Nifty pack. Let's talk about those sectors, how the sectors have performed, and largely we see defense is doing really well. Remember, India, Israel meet is also happening. PM Modi is in Israel. We can expect something from defense as well. Already some announcements are there. Healthcare, pharma, the street is finding some kind of solace in a defensive pack, and that's why we're seeing some good movement happening, especially in the F&O space. Apart from that, even PSU Bank is seeing a good sense of buying, but what's not working is definitely a little bit of FMCG, but there's nothing to actually complain about. Markets are showing a good strength. Let's pull out the advanced decline ratio to give you another picture of how markets are moving, and we can just show the advanced decline ratio, and yes, this is where the changeover has happened in the last 45 minutes to half an hour. That is where we are seeing the divergence taking place, and it's a very good actually sentiment to actually see this green going above the red. But net it's pretty good for the broader markets. Let's pull out the BSE 500 index to show you more stock specific moves, and of course Tejas network is doing really well. It's up 20%. Orient Electric moving, KSB on the back of earnings, seeing a good jump. And on paper stocks also is something which you should watch out for. We had given you a hint also around 2 weeks ago that the prices are being hiked, and Q3, Q4 numbers is generally good for a paper industry. Also in the sell-off, there's a block deal impact of Home First Finance and some kind of profit boofing definitely coming in for Team Lease and even Affle and PCBL as well. So these are the stocks But nevertheless, a kind of a consolidation is something which we are seeing in the market as we start the March series. So that's all, folks, for India Market Close. Stay tuned to NDTV Profit, and up next is Market Express.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a highlight of all the headlines that you should keep track of this evening, and along with that, all the stocks that you should be keeping on your radar at this point in time. But before we do that, quick look at what the markets did. It was a mixed day of trade coming in when you talk about Indian equities. Benchmarks saw seesaw trade through the course of the day. Both Nifty and Sensex, after an early surge coming in, erased the gains during mid-session, eventually to end near that flat note as well in terms of broader markets. Let's talk about the broader market picture as well. Mid-cap index relatively outperformed, while small-cap index ended on a little bit of a flat note, mirroring the benchmarks. Let's also talk to you about the sectoral picture. Then the gains were largely led by defense and pharma counters. PSU Bank Index also staged a recovery during the day, followed by auto stocks. So that's something that you were looking at when you talk about sectors. On the losing side, something like FMCG stocks, financials, those were witnessing a mild selling pressure. So that's the entire sectoral picture as well. But let's also talk about stocks, and onto a stock that was buzzing away in trade, as you can very clearly see on your screen. Sanofi Consumer reports yet another strong quarter, posting over 40% growth for the second consecutive period. Domestic sales rise around 23%. Exports surge nearly tenfold on a low base. When you talk about the revenue as well, you're looking at a 50% thereabout jump coming in to about 250 crore rupees, with profit after tax up about 50% as well. And the company also improves operational efficiency, cutting stock levels, depreciation and other expenses, significantly maintaining healthy margins, near 36%. Let's also talk to you about Shaily Engineering Plastics that has clinched a major, somewhere close to 400 crore manufacturing and supply contract from a large domestic pharma company. On the back of that, the stock was buzzing away in trade. 2.5% uptick coming in on this particular counter on the back of that boost coming in to the sentiment around the stock and strengthening its position in the fast-growing drug delivery devices space. Now, when you talk about the long-term agreement, this spans about 4 years and involves the production of pen injectors, marking a significant expansion of the company's healthcare portfolio. Let's also talk to you about a pharma pack that has been in focus all day today. So there's Zydus Life that actually stands out on the back of gearing up to launch its semaglutide injection in India the moment the patent expires, introducing it under the brands Semaglyn, Mashima and Altome. Now, when you talk about the DCGI that has already cleared this particular product for type 2 diabetes and even obesity, and when you talk about this particular version of the company, that's going to be featuring a first of its kind reusable adjustable pen device that is a major differentiator also coming in, also cuts costs and improves adherence. Let's also talk to you about DRL or Dr. Reddy's Laboratories that says that Sandoz has not provided guidance on the semaglutide launch in Canada, with a potential launch now likely in the second half of 2026. Now let's talk about approvals or launches of GSCMA in Canada and Brazil that could also face delays, which contrasts with the company's earlier guidance. So you're looking at first half of 2026 just for that little bit of timeline. And now from here on, you can be expecting a little bit of delay. Let's also talk to you about Poonawalla FinCorp that is in focus after UBS initiated coverage with a buy rating and a target price close to about 640 rupees, implying nearly 40% upside from the current levels that you're seeing for this particular counter. Now, the brokerage says that the NBFC is shaping into a solid franchise backed by strong management quality and a rare AAA credit rating that gives it access to low-cost funding. When you talk about the word coming in, they expect loan against property and gold loans to become the company's anchor growth engines in the years ahead. Let's also shift focus onto banks, then talk to you about Bandhan Bank that has received a significant boost after SBI Mutual Fund secures RBI nod to acquire up to 9.99% stake in the private lender. Now, when you talk about this particular approval, that has been granted via an RBI letter, and it allows SBI MF to raise its holding, currently around 3.45% for context, through its balanced advantage fund to just under 10%, subject to compliance with banking and securities norms. Now, this particular rule must be acted upon within just about a year, and SBI MF cannot be breaching this particular ceiling at any time. Let's also talk to you about SBI that remains firmly on CLSA's radar. In fact, the brokerage maintains an outperform rating and sets a target price close to about 1,200, somewhere close to 1,200 rupees. In a note as well that playfully asks, who said elephants can't dance? You do have CLSA highlighting SBI's strong growth and profitability as well, calling it a core portfolio stock thanks to consistent execution. Now, in terms of other commentary coming in, they're also talking about how the company has successfully de-risked its balance sheet while still growing faster than the industry. Now, importantly, you do have CASA growth that is finally picking up after 3 muted years, and that's also something that CLSA highlighted. Let's also shift focus back to pharma, because there's Lupin that is in focus here on the back of them confirming that the Maharashtra GST department has initiated an inspection and search operation at its registered Mumbai office. Now, officials are reviewing documents related to GST payments and input tax credit claims as part of a compliance-focused examination. When you talk about the company in terms of commentary, they're saying that they're fully cooperating with authorities and providing all requested information at this point in time. Importantly, the company has clarified that the proceedings will have no impact on its financials, business operations, or even ongoing activities. Let's also talk to you about Diageo, or the parent company of United Spirits, that has trimmed its 2026 sales and profit outlook, sending the stock down sharply in global trade as well. The world's largest spirits maker now expects organic sales to come in 2 to 3% lower on the back of that. You did have USL also trading with a cut of about 1.7% thereabout. Despite the downgrade, Diageo in fact highlighted that growth in markets, the likes of Latin America and even parts of Asia, including India's Andhra region, remains resilient at this point in time, with the company also expecting this to be offsetting some of the broader global slowdown. Let's also move on and talk to you about KSB, that has in fact reported a strong set of numbers in the third quarter. Margins expanded sharply, revenue rose about 8% thereabout. While when you talk about their EBITDA as well, you're seeing a jump of about 30% coming in here, lifting margins to around 16.5%. When you talk about the profit as well, that is up about 11% on a year-on-year basis, and the stock of course was gaining in trade, up about 9.2% following that robust set of numbers. Let's also shift focus back to brokerages now. Talk to you about brokerages remaining positive when it comes to some of the gold financiers amid strong loan growth. When you talk about Jefferies, they're saying that gold loans are rising sharply, helped by firm gold prices and easing regulations that could aid large NBFCs in defending market share. Now, they're also talking about favorable risk reward here for Muthoot Finance in terms of the companies that they're looking at. Meanwhile, Macquarie is flagging rapid growth when you talk about the segment and also expects the RBI to stay watchful at this point in time. It also cautions that any sharp correction when it comes to gold prices could impact growth but also recoveries. Let's also talk to you about Jindal Polyfilms that has faced a legal setback as the National Company Law Appellate Tribunal, or NCLAT, has dismissed the company's appeal against the admission of a class action suit by the NCLT. Now, the case, the first of its kind in the country, alleges undervalued transactions involving the promoters. The dismissal means that the class action proceedings will continue as admitted by the NCLT. Let's also talk to you about Diamond Power Infra. Now, that particular counter was in focus on the back of securing a significant order from KPI Green Energy, valued at about 93 crore rupees. Now, the stock, of course, was trading with a slight bit of a negative bias, but the contract is for the supply of power cables and is slated for execution by June 2026. This order underlines the company's growing role when you talk about the renewable energy sector and also adds to its order book. Let's also talk to you about Chola Finance that has in fact dismissed media reports suggesting that Executive Chairman is going to be exiting Cholamandalam Investment Finance as part of a Murugappa family settlement. The company called the rumors factually incorrect and entirely baseless. Shares of the firm had fallen as much as about 7% in the start in the early hours of trading session today, but pared most of the losses following this particular clarification. Let's also talk to you about Sentum Electronics that was set for a strong growth in the coming quarters after securing a major order from HAL to the tune of about 600 crore rupees. Now, the company expects its order book that is already near 1,800 crore rupees at the end of Q3 to grow further with upcoming space-based and critical program orders. When you talk about the commentary as well, you do have the joint MD of the company telling NDTV Profit that Sentum Electronics is guiding for somewhere close to 25 to 30% growth in the next few quarters, reflecting that little bit of strong momentum from new wins and strategic expansion plans. Let's also talk to you about MB Photovoltaic that says that it remains insulated when it comes to the US solar import duties, shielding its business from international trade pressures. When you talk about the company's manufacturing, that continues to be closely aligned with domestic demand. Also a little bit supporting steady growth here in the renewable energy sector. Let's also talk to you about the National Stock Exchange that has begun inviting global and domestic banks to pitch for its long-awaited $2.5 billion IPO, which would become one of India's biggest market listings. According to reports, now the exchange has asked investment banks to submit proposals in the coming weeks as it works toward reviving its long-delayed plan after resolving key regulatory concerns. Now, the listing is expected to value NSE among India's most valuable financial market institutions. Let's also talk to you about the center telling major tech platforms that the 3-hour deadline for removing flagged AI-generated and deepfake content will remain unchanged. Now, this is at a review meeting where officials in fact said that compliance with IT rule amendment is non-negotiable. In fact, platforms cannot expect exemptions or shielding if they fail to act quickly. The government also said that the bigger challenge right now is prioritizing harmful synthetic content, not just labeling requirements. And more when it comes to regulation against platforms, then Union Minister Ashwini Vaishnav has issued a sharp warning when it comes to digital platforms, saying that they must wake up and take full responsibility for harmful synthetic and AI-generated content. He's also stressed that non-adherence to the rules is going to be making platforms liable, and deepfake content must not be created without a person's consent. Vaishnav has also urged platforms to rethink revenue sharing, saying that creators, news organizations, and even researchers deserve fair compensation, and suggested legal action could follow if companies don't act voluntarily. Let's also talk to you about Indian Railways that has announced two major reforms aimed at speeding up innovation and modernizing passenger services. The launch of a new rail tech policy and a fully digital claims tribunal. Railway Minister Ashwini Vaishnav also said that the rail tech framework will create a structured pathway when you talk about startups and tech companies to develop India's railway-specific solutions. At the same time, the digital tribunal is designed to transform how compensation claims are processed, reducing delays and enabling transparent time-bound decisions through an online platform. Let's also talk to you about SEBI unveiling a sweeping overhaul of mutual fund classifications, introducing a new life cycle fund category and tightening rules to ensure schemes remain strictly true to label. Now, the regulator has also standardized fund of funds structure, set investment caps, and also asked all existing schemes to realign within 6 months. The changes aim to reduce product clutter, but also prevent overlap and make fund choices clearer when it comes to investors. Let's also talk to you about India's next census, scheduled for 2027, is going to be a fully digital exercise for the first time in history, powered by a new census management and monitoring system. The portal is going to be replacing paper forms with handheld devices, digital maps, and even real-time monitoring. So that's something that you're looking at in terms of the digital push here. Over 3.2 million field staff will collect and upload demographic data directly through mobile systems. Citizens will also have the option of self-enumeration. Let's also talk to you about the Central Drugs Standard Control Organization that has modified norms for testing permissions to speed up drug approvals in the country. Under the revised framework, companies seeking approvals can obtain testing permissions more quickly, cutting regulatory delays. The changes, in fact, aim to streamline timelines when it comes to drug evaluation, but also improve coordination between labs and manufacturers and reduce bottlenecks when you talk about the approval process. Now, the CDS CEO says that this particular move is going to be helping expedite access to new medicines and also enhance the efficiency of India's pharma regulatory system, benefiting patients and industry alike. Let's also talk about the government of India directing petrol retailers to sell E20 petrol with a minimum somewhere close to 95 grade across the country from April 1st. Under the new mandate, in fact, all fuel stations must offer the blended petrol, which contains about 20% ethanol and 80% conventional fuel, aimed at reducing emissions and also boosting farm-based ethanol usage. When you talk about states and oil marketing companies, they have been asked to prepare for distribution and storage upgrades ahead of the rollout. Now, this is one move that aligns with India's ethanol blending goals and energy transition strategy. Just for a little bit of background here, and it's expected to gradually replace traditional petrol grades over time. Let's also talk to you about Apple Inc. that is in talks with major Indian banks and global card networks as it prepares to launch its Apple Pay payment service in India around mid-2026. According to people familiar with the matter, negotiations involve ICICI Bank, HDFC Bank, and Axis Bank. So that's some heavyweights that you're talking about here, with discussions also including MasterCard and also Visa for support. The timeline is still fluid, but the planned launch signals Apple's push into India's fast-growing digital payments market here. Now, the service is expected to support Unified Payments Interface or UPI and card payments pending regulatory and banking approvals. Let's also talk to you about EdTech major upgrade that has acquired internship and training platform Internshala in a full stock swap deal, marking a major consolidation when it comes to India's skilling and employability space. While the valuation has not been disclosed at this point in time, Upgrad says that the move strengthens its learn to work ecosystem by combining its higher education and skilling programs along with Internshala's internship network. Both companies are going to be continuing operations independently, but will now collaborate closely when it comes to courses, assessments, and even placement-linked pathways for students and early career professionals. Let's also talk to you about Nvidia that has reported another record quarter coming in, posting about $68.1 billion in Q4 in terms of revenue. So you're looking at a 20% uptick sequentially and 73% on a year-on-year basis, driven by explosive demand when it comes to AI computing. Now, its data center business alone hit about $62.3 billion, which is an uptick of about 75% from last year as hyperscalers ramped AI investments for financial year 26. When you talk about the revenue as well, you're looking at a surge of about 65%. Let's also get you the commentary coming in from the management, because you do have the CEO who said that agentic AI is at an inflection point, and that inflection point, in fact, is something that has arrived, according to Jensen Huang, the CEO of the company, with enterprises racing to expand AI compute capacity. Now, businessman Anil Ambani appeared before the Enforcement Directorate amid an ongoing money laundering probe into companies linked to the Reliance Group. The questioning comes under the PMLA in connection with alleged financial irregularities involving group entities. In a separate development, the Central Bureau of Investigation has registered a fresh case against Ambani and Reliance Communications for allegedly defrauding Bank of Baroda of about 2,200 crore rupees between 2013 and 2017. Both investigations are active, and details of Ambani's ED questioning have not been disclosed at this point in time. Let's also talk to you about Sikkim that has been jolted by 2 back-to-back earthquakes, but officials say that there are no injuries or damage at this point in time. Luckily, a stronger tremor was felt late morning, followed by a smaller one shortly after, with both quakes centered in the Gyaltsing and the Mangan regions as well. Now, when you talk about the National Center for Seismology, that says that the quakes were shallow, which is why they were widely felt across the nearby towns as well. Now, let's talk to you about India's Commerce Minister Piyush Goyal meeting US Commerce Secretary Howard Lutnick as well, and Ambassador Sergio Gore in the national capital, holding what he called very fruitful discussions, in fact, to deepen trade ties. The meeting comes just days after the US Supreme Court struck down President Trump's earlier tariffs, prompting Washington to impose that temporary 10% tariff on all partners, which is a rate that Trump has warned could rise to 15%. And we've been talking about this, but India has postponed a planned delegation visit to Washington and is now studying the ruling's implications before moving ahead with the next phase of trade talks. Now, according to reports, the EU's proposed carbon tax on imports will remain part of the India-EU free trade agreement discussions, signaling that the levy is not being rolled back despite India's concerns. Now, the issue will be handled through technical negotiations with Brussels, also willing to clarify the Carbon Border Adjustment Mechanism, or CBAM, but not dilute it. India has repeatedly argued that the tax disproportionately affects its steel and aluminium exporters. The official added that both sides are continuing to work on market access issues and tariff reductions, expressing optimism that progress can be made even as the CBAM debate remains a sticking point. On to some more international news then. Canadian Prime Minister Mark Carney begins a 4-day visit to India on Friday, his first since taking office, a key step in repairing bilateral ties strained in recent years. Now, he starts in Mumbai with business meetings before heading to the national capital, where he and PM Modi will be holding talks on Monday. Now, India's MEA has in fact said that the visit comes at an important juncture in normalizing relations, with both sides also set to review the progress in the India-Canada strategic partnership as well, and explore deeper cooperation when it comes to not just trade but also investment, energy, education and innovation. Now, with the clock ticking and President Trump's March 1st to 6th deadline fast approaching, US-Iran nuclear talks have entered a tense third round. In a rare diplomatic relay as well, you do have Oman's foreign minister who's now carrying Tehran's latest proposals to the American negotiating team, a last-ditch attempt to break the stalemate at this point in time. The mood at the table is quite edgy, expectations mixed, and the stakes unmistakably high this week could decide whether the two sides inch toward a breakthrough or watch the window slam shut as well. And this is going to be extremely crucial for oil prices as well. There's a dramatic new twist when it comes to Nicolas Maduro drug trafficking case. His lawyer says US authorities are blocking Venezuela from paying his legal fees, citing sanctions that require special treasury approval according to court filings. A license briefly granted to Maduro's attorney was revoked within hours, leaving the ousted Venezuelan leader also unable to fund his defense. In fact, Maduro, taken to the US in a January 3rd raid, has pleaded not guilty, calling himself a prisoner of war. Now, US federal judge has ruled that the Trump administration's third country deportation policy is unlawful, dealing a setback to the broader immigration crackdown. The policy, adopted in March 2025, allowed rapid deportation of migrants to countries other than their home states with minimal notice, without giving them a meaningful opportunity to object. US District Judge, in fact, has said that the policy violated due process protections and declared it invalid. He's also paused the ruling for 15 days to allow for an appeal. The decision underscores ongoing legal challenges to current immigration enforcement rules. With that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on
Market ends flat with Nifty below 25,500. Sectors closed mixed with the defense index after Prime Minister Modi spoke about deepening India-Israel defense ties and said that a strong defense partnership between trusted partners is vital. Fraudulent transactions worth $280,000 hit 5,000 of Yes Bank's multi-currency forex cards. The bank says it's working to recover all disputed amounts after blocking 688 unauthorized transaction attempts. Indian IT stocks gain after Nvidia announces record quarterly revenue of $68 billion and fourth quarter full year revenue jumps by 65% to $215.9 billion. Gold rebounds to edge towards $5,200 an ounce as investors await developments related to Tehran and Washington. Bitcoin inches towards $70,000 after snapping out of 3-session losing streak. Government maintains 3-hour timeline for taking down content, deepfake and AI content from platforms. Sources say it told the big tech that compliance with IT amendments is a priority and is non-negotiable. Commerce Minister Piyush Goyal meets US Commerce Secretary Howard Lutnick and US Ambassador to India Sergio Gore engaged in very fruitful discussions to expand our trade and economic partnership, Minister Goyal posted on his X account. Railway Minister Ashwini Vaishnav promises 52 reforms in 52 weeks, announces rail tech policy, invites startups to resolve innovation challenges and brings in Railway Claims Tribunal, a digital solution designed to streamline and modernize processing of court cases in RCT. Trouble mounts for industrialist Anil Ambani as the CBI registers another case against him and Reliance Communications for allegedly defrauding Bank of Baroda of 2,223 crore rupees between 2013 to 2017. Hello and welcome. A very good evening, viewers. This is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you all the latest insights into markets, national as well as international news. Let's go straight to the day's market action first. Benchmark indices closed flat, with Nifty ending below 25,500 after sharp moves throughout the session. Sectors ended mixed, with the defense index especially gaining the most. Nifty Financial Services fell for the second day in a row as the weakness in financial stocks outweighed continued recovery in information technology. Let's go across to my colleague Jasmeet Singhai for a quick wrap of what happened through the day.
Nifty ends flat in today's trade. If you look at the overall picture, Nifty ends just below 25,500 mark and up about 0.06% in today's trade. While Trent and Eternal lead the overall fall in Nifty today, down about 1.5%, while Tata Motor and Eicher lead the gain in Nifty, up about 2%. The broader market ends on a mixed note. If you look at the Nifty Midcap 150, it's up more than 0.5% today's trade. And what led the gain in Nifty Midcap 150 is Mankind Pharma among the top gainers, which has gained over 4% today's trade. While Nifty Small Cap 250 also ends flat in today's trade, and we have overall Sagility and Home First, which fell the most in Nifty Small Cap 250, both down about 5%. If we look at the sectors end on a mixed note. Nifty Pharma gains over 1% in today's trade, while Nifty Media becomes a top loser, ends about 0.5% lower in today's trade. While Tips Music lead the fall in Nifty Media, down about 2.5% today, while lastly Nifty Financial Services fall for the second day in a row.
Thanks so much for that market wrap, Jasmeet. But being straightforward, headwinds in the IT services space is real. This is the view of Vikas Parshad of M&G Investments. In a conversation with us earlier today, viewers, the equity expert highlighted that while some mid-cap names have been unfairly punished due to the SaaS apocalypse, he is still underweight IT index. Listen in to his rationale.
There are some small and mid-cap companies in particular in India that have been, we think, unfairly punished. Some tech platforms, some IT services that are listed in India but have a majority of the customer base abroad, but are very different from the heavyweight benchmark components that everybody is focused on. So again, we are seeing opportunities in this. There are some stocks that are down 20 to 40% just in February, as this SaaS apocalypse, as some people are calling it, has taken root all around the world. But if you just focus on the IT services sector, the revenue headwinds are real. The cost structures are still high, given what might happen or the revenue opportunities that we might see in the next couple of years. So we remain underweight the IT services sector here.
With that being said, Indian IT stocks like TCS, Infosys and HCL Tech have been in focus after global tech giant Nvidia reported another blockbuster Q4 with quarterly revenue surging to about $68.1 billion, driven by strong AI chip demand and data center spending. Nvidia's results bolstered global tech sentiment, lifting the Nifty IT index nearly 2%, which is its second straight session of gains after recent weakness. Nearly all major IT stocks traded higher, reflecting renewed optimism around AI spending cycle and services demand that could benefit Indian IT exporters. In fact, during the earnings con call, Nvidia CEO Jensen Huang said the company remains confident about long-term cash flow growth, citing a fundamental shift in global AI adoption. Let's listen into his remarks.
I am confident in their cash flow growing. And the reason for that is very simple. We have now seen the inflection of agentic AI and the usefulness of agents across the world in enterprises everywhere. You're seeing incredible compute demand because of it. In this new world of AI, compute is revenues. Without compute, there's no way to generate tokens. Without tokens, there's no way to grow revenues. So in this new world of AI, compute equals revenues. And I am certain that at this point, with the productive use of Codex and Claude Code and the excitement around Claude Cowork and just the incredible enthusiasm about OpenClaw and the enterprise versions of them, all of the enterprise ISVs who are now working on agentic systems on top of their tools platforms. I'm certain at this point that we are at the inflection point. We've reached the inflection point, and we're generating profitable tokens that are productive for customers and profitable for the cloud service providers.
So key takeaway from that commentary, in this new world of AI, revenue is equal to compute. Let's now put the spotlight on defense space, which has been gaining in trade today. Most defense stocks, if you see, are on the rise as investor interest solidifies ahead of a potential India-Israel defense deal. Shares of defense companies like Bharat Electronics, HAL, Cochin Shipyard, Mazagon Dock and Garden Reach Shipbuilders, for instance, have all been trading with gains of anywhere between 0.5 to 2% in trade today. For instance, Nifty India Defence Index itself has been up and high in the green today. But as per media reports, PM Modi's visit to Israel this time is likely to go beyond just the realm of defence and could transpire into high-tech and AI as well. However, with the partnership gaining momentum, several Indian companies are set to share technology and manufacturing expertise with Israeli counterparts. And my colleague Mahima is here with a lowdown on the overall ties and how exactly does it benefit the defence sector. Mahima.
Over a period of time, the relationship between India and Israel, especially in the defense space, has evolved, and how, right? From a buyer-seller relationship to now a deep, multifaceted strategic alliance is what we are seeing in terms of partnership that focuses on co-development as well as co-production. India and Israel, in fact, India is Israel's biggest defense customer and accounts for 34% of all Israeli defense exports has been between 2020 to 2024. In fact, the bilateral defense collaboration has reached around $8.6 billion in early 2026 as well. Now, speaking about the partnerships in different areas of defense, air and missile defense, the two most important ones were Barak 8 as well as the flagship joint development between DRDO as well as IAI. In terms of drones, there is extensive use of Heron TP Searcher as well as Hermes and different other products like 900 UAVs plus Drishti Trend plus there is also India use of Harop as well as Harpy kamikaze drones. In terms of the partnerships in terms of precision strikes, there is India that has recently approved around $8.7 billion package Spice 100 guided bombs plus Rampage air-to-surface missiles and air LORA ballistic missiles is also on the cards. In terms of ties, that is in terms of joint ventures, well, major Israeli firms like IAI plus Elbit plus Rafale have JVs with Indian giants. The companies that have exposures or JVs or partnership with these companies include Adani Defense Aerospace plus Bharat Forge, Tata Advanced Systems, Mahindra Defense, Larsen & Toubro, HAL, BEL as well as Bharat Dynamics. In terms of treaties, 10-year roadmap for AI, cybersecurity, quantum computing has been there. Bilateral investment treaties signed in September 25 aimed at turbocharging defense investments. In terms of the ties between the two countries for missiles and bombs, there's key systems that includes Spice 2000 guided bombs, Spike anti-tank missiles plus Rampage air-to-surface missiles. For something like a surveillance that India uses, Israeli Falcon AWACS is something that they've got from there, advanced radar systems as well. And lastly, for manufacturing hub, there are different JVs in place. You have Adani Elbit Advanced Systems, PLR Systems, Kalyani Rafale Advanced Systems, and for emerging technologies that we're looking at, that includes some things like laser weapons, Golden Horizon missile, as well as something like a cyber security and AI in combination. So this is the overall view of, you know, what one can make from this visit of Narendra Modi, and plus how defense has been, the ground for India and Israel relationship.
Thanks so much for all those details, Mahima. But viewer shares of Jindal Poly tanked about 6% in trade today as India's first corporate class action case against Jindal Poly Films caught investor attention. The National Company Law Appellate Tribunal, or NCLAT, has refused to stop the proceedings. For a quick background, minority shareholders Ankit Jain, Reena Jain and Ruchi Jain Hanasoge, who hold nearly 5% stake, filed this case. They accuse the company's promoters and management of fraud and siphoning of about 2,500 crore rupees through undervalued sales of assets and related party deals. They claim Jindal Poly invested heavily in group power firms years ago, then sold stakes at very low prices to promoter-linked entities, causing big losses to public investors. Then on the 5th February, the NCLT admitted the petition and issued notice, but Jindal Poly appealed for a stay. Today, however, the NCLAT dismissed the appeal, letting the NCLT case continue on grounds of merit. Moving on, let's focus on gold prices as they rebounded after last session's weakness to edge towards $5,200. That's the mark they're currently hovering on. Investors also await more developments related to Tehran and Washington as a third round of nuclear talks is currently underway. Remember, all of us have actually been keeping an eye on this particular conversation. Gold, which is a store of value in times of geopolitical uncertainty, has been benefiting from concerns around a conflict in West Asia for much of this week. A slightly weaker US dollar also made bullion less expensive for overseas buyers. All this while brokerages are quite bullish, with JP Morgan the latest addition to the list. The brokerage predicts that gold could hit $6,300 an ounce by the end of this year. So that's the mark that you need to watch out for. But shifting tracks to Yes Bank, the lender's multi-currency forex card has been hit by a major fraud incident, and this affects more than 5,000 customers and is linked to Latin American merchants. My colleague Nisha Podar joins us with all the details. Nisha, what's going on with Yes Bank?
That's right. It's a pretty important fraud that has been detected at Yes Bank, where 15 transactions with the merchants coming in from Latin America on account of the prepaid multi-currency forex card that was issued by Yes Bank to its customers. This has impacted 5,000 of its customers with fraudulent transactions online on e-commerce transactions, and has really caused a fraud of $0.28 million. Now, this comes in because of the vulnerability when certain countries do not have two-factor authentication route for approving the transactions when the transactions are made online. Remember, the Indian online transaction system is well fortified because of the two-factor authentication, which is not available all across the world. Therefore, stringent measures have been taken by Yes Bank when they detected these fraudulent transactions, and several of these transactions were also declined. Unauthorized transactions were also declined. So they have taken stringent measures measures in order to avert, investigate, and also to block the e-commerce online transactions coming in from the specific country at the moment. Of course, the banking regulator, RBI, has also been said to ask questions from Yes Bank on this particular matter. But it is to be noted that definitely when a forex card is used, which is prepaid in nature, and you use it in the countries where there are no specific transaction authentications which are prevalent in India, then this vulnerability prevails, and that's the larger question to really look at.
Well, thank you so much for that roundup on what's happening with Yes Bank and the fraud that has just emerged. But viewers, Bitcoin has surged towards the $70,000 mark, snapping a 3-session losing streak as risk appetite returned to global markets. The move came alongside gains in equities after Nvidia delivered another strong earnings report, which helped lift broader sentiment. Bitcoin jumped as much as 9.3% to $69,987, its biggest intraday gain since early February, while Ether climbed about 13% to roughly $2,100. Analysts caution, however, that despite the rebound, the industry mood remains mixed, with an estimated 9 million Bitcoin still held below purchase cost, limiting over-enthusiasm among long-term investors. But moving on to an important story, the government has maintained 3-hour limit for taking down deepfake and AI content. 3 hours. Sources told NDTV Profit that in a meeting with big tech firms such as Meta, Google, OpenAI on the AI content rules from the 25th of February. Let's go across to my colleague Rishabh Bhatnagar, in fact, for all the details. Rishabh, what are you picking up on this matter?
Right, so there was a very important meeting yesterday between the government, attended by senior media officials and various representatives of big tech as well as Indian technology companies. And what the government essentially told these platforms was that they will not be making any changes to the amendments to the IT rules that were notified on February 10th. They came into operationalization on February 20th, and there were some concerns that were highlighted by these platforms that the 3-hour timeline for takedown of certain content is quite short. They cited certain operational challenges, but the government stood firm on its stance. They said that compliance with these is a priority and it is non-negotiable. They said that the liability for any violations that might come will be decided later on a case-by-case basis, but the government added that it cannot possibly be shielding these firms if they don't comply with these amendments to these IT rules. So what you and I as users of social media platforms can expect is that these AI labels, which is essentially some sort of form of labeling of deepfake or artificially intelligent content on our timelines and on our feeds, those labels might come into existence very, very soon, and you and I could possibly be seeing these very, very soon on our social media platforms. So that's what we're picking up from meeting.
Okay, thank you so much for that update. And viewers, that simply means, as Rishabh highlighted, that there's stringent action being taken against deepfake or artificial intelligence related content. And 3 hours window is something that needs to be tracked and looked into. But Ashwini Vaishnav, in fact, speaking along the same lines, has issued a sharp message to digital platforms saying they must take responsibility for the content they host, especially as deepfakes and synthetic media rise sharply. Let's listen into his comments.
Platforms must take the responsibility for the content that is hosted by them. The online safety of children, the online safety of all citizens is the responsibility of the platforms. Non-adherence to these principles will definitely make them responsible, because the nature of internet has changed now, and synthetic content should not be generated without the consent of the person whose face or voice or personality has been used to create the content.
There's another comment from Ashwini Vaishnav that we want you to listen to. Ashwini Vaishnav has also unveiled Rail Tech Portal, ERCT, as part of railway reforms. He said the government is rolling out 52 reforms in 52 weeks for Indian Railways in 2026, building on 2 reforms already announced earlier this year. The broader reform push focuses on modernizing technology use, speeding up services, and improving efficiency across the rail network. Listen in.
रेलटेक का बेसिकली स्टार्टअप्स के लिए परमानेंटली ओपन रहेगा, ये परमानेंटली ओपन रहेगा और प्रॉब्लम स्टेटमेंट्स कभी भी नए सॉल्यूशंस दे सकते हैं. इसको टेंडर और एक वो अवधि और उसके बैरियर से निकाल दिया है.
Okay, and spotlight on India-US relations. Commerce Minister Piyush Goyal has met US Commerce Secretary Howard Lutnick and Ambassador Sergio Gore in New Delhi, holding what he called a very fruitful discussion to deepen trade ties between both the countries. The meeting comes just days after the US Supreme Court struck down President Trump's earlier tariffs, prompting Washington to impose a temporary 10% tariff on all partners, a rate Trump has warned could rise to 15%. India has postponed a planned delegation visit to Washington and is now studying the rules' implications before moving ahead with the next phase of trade talks. The Enforcement Directorate, in other news, has provisionally attached Pali Hill residential property aboard of Anil Ambani in Reliance Communications bank fraud case, which is worth about 3,700 odd crores under PMLA 2002. Now, cumulative attachment of properties in the group now stands at over 15,700 crore rupees. The property is located in the posh Pali Hill area of Bandra and counts top Bollywood stars amongst its neighbours. Let's go across to NDTV's Saurabh Gupta, joining us now from outside the Pali Hill property for all the details on this case.
A major step by the Enforcement Directorate as it continues its investigation into allegations of money laundering against, of course, RCom, which is an Anil Ambani associated company. Now, the Enforcement Directorate says that it has provisionally attached the Pali Hill residential property aboard of Mr. Anil Ambani in the Reliance Communication Limited's bank fraud case. Now, what the ED goes on to say is that RCom and its group companies avail loans from domestic and foreign lenders, which is, of course, a total amount of rupees 40,185 crores, and this amount is outstanding. And the ED also goes on to say that the ED investigation has revealed that among other assets, the Pali Hill property, pictures of which you see right now, was aggregated into the Rise E Trust, a private family trust of the members of Mr. Anil Ambani's family. This was done to make it appear as though Mr. Anil Ambani is not involved. The ED then goes on to say the intended effect of this corporate restructuring was to ensure wealth preservation and resource generation by aggregation of the property in the Rise E Trust and shield it from the personal liabilities of Mr. Anil Ambani in the form of personal guarantees extended by him to lender banks against the sanctioned loans to RCom. Now, the value of this property, according to the
Let's quickly show you and cut across to live visuals of Prime Minister Narendra Modi in Israel. On your screens is also our External Affairs Minister S. Jaishankar, who's just walked out of that frame, but you can still see Narendra Modi and Prime Minister Benjamin Netanyahu. Jaishankar, in fact, is right now being felicitated by both the leaders. Remember, Prime Minister Narendra Modi is in Israel on a high-profile 2-day visit, making his second trip to Tel Aviv after the historic 2017 visit. PM Modi has also met Prime Minister Benjamin Netanyahu yesterday, and in fact, we also covered his address in the Parliament of Israel, the Knesset, which is also, remember, one of the first done by any Indian Prime Minister. These are live visuals on your screen. As you can see, a felicitation of certain dignitaries happening at this given point in time. Remember, PM Modi was also the first world leaders to sort of condemn the deadly attacks of Hamas, in which almost 1,200 Israelis were killed and some 250 kidnapped. But this time, the relationship between Israel and India goes beyond just defense. They're expected to tie and talk about trade in various aspects, whether it's technology, artificial intelligence, and a lot more. we're showing you live visuals of PM Modi and Benjamin Netanyahu felicitating key dignitaries who are in their presence at the moment.
Thank you both very much. And the presentation of the report of the 4th India-Israel CEO Forum will be presented by the Trade Commissioner for the Ministry of Economy, Mr. Roy Fisher, and the Ambassador of India to Israel, Ambassador J.P. Singh. Please take the stage. And now the implementation protocol to the agreement in commerce and services sector, the manufacturing sector, and the restaurant sector will be signed by the Director of Foreign Workers Administration at the Population and Immigration Authority, Mr. Moshe Nakash, and the Foreign Secretary for the Republic of India, Mr. Vikram Misri. Please take the stage. Thank you. The letter of intent on the establishment of the Cyber Center of Excellence will now be signed by the Director.
The opportunity to not look all deep into our hearts, but also into our remarkable minds that we have in our two countries. We saw an exhibit of innovation that excites imagination beyond belief. We spoke about cooperation with the extraordinarily talented people of India and our people, and we're working this into concrete plans. I'll just give you two examples. You know, you talk about precision agriculture. You know what that means. It means you don't average irrigate a field. You target a specific part. No, you target a specific plant. You water a plant. Well, why can't you water a specific student's mind? When we talk about precision education, we have now the software and the AI to reach every young student, boy or girl, and enable them to reach their full potential. And the limitations that were constraining us in previous times no longer constrain us. That is, to those who seize the future. The future belongs to those who innovate, and Israel and India are bent on innovation. We are proud ancient civilizations, very proud of our past, but absolutely determined to seize the future, and we can do it better together. We've decided to have a G2G meeting in India as soon as we can arrange it. We'd like to take the distinguished ministers who are here. I have to comment, my friend Narendra, you have an amazingly efficient government. What you can do with one minister and one ambassador. Now, it gives me thoughts. I don't want you to worry about it. Don't worry about it. But in fact, we know that the meeting of minds and hearts that we've had here will also continue in this remarkable G2G that is long overdue and will create an even greater boost to the enormous benefits that we can bring to each other and I think to humanity at large. And finally, I have to say at the end of this visit that I owe India, I don't know if I told you this, Narendra, but I owe India a great personal debt. You see, when I met Sarah for the first time, I think our first or second date was in an Indian restaurant in Tel Aviv. It was Rina Pashkarna. And I have to tell you, there is no question. First of all, the food was unbelievable. And Sarah was introduced to it for the first time, so it was a great first date, not only with the food, the date was excellent too. So obviously I'm indebted to you, as are my children, and I want to tell you how deeply and from the heart we feel both our personal friendship and the friendship between our governments and our peoples, and may this continue and flourish and strengthen, as I'm sure it will as a result of this visit. Thank you, Narendra, and thank you all. Thank you.
Chalo to use. Your Excellency, प्रधानमंत्री और मेरे मित्र नेतन्याहू, मिसेस नेतन्याहू, दोनों देशों के डेलीगेट्स, मीडिया के साथियों, नमस्कार, शालोम। मेरे और भारतीय डेलीगेशन के गर्मजोशी भरे स्वागत के लिए मैं प्रधानमंत्री नेतन्याहू का एक बार फिर हृदय से आभार व्यक्त करता हूं। 9 वर्ष पहले मुझे इजरायल की यात्रा करने वाले पहले भारतीय प्रधानमंत्री बनने का सौभाग्य मिला था। एक बार फिर इजरायल की ऐतिहासिक भूमि पर कदम रखना मेरे लिए गर्व और भावुकता का क्षण है। कल मुझे इजरायल के पार्लियामेंट को संबोधित करने का अवसर मिला। वहां मुझे स्पीकर ऑफ द क्नेसेट मेडल से भी सम्मानित किया गया। मैं इस सम्मान के लिए क्नेसेट स्पीकर महोदय, मेरे मित्र प्रधानमंत्री नेतन्याहू और इजरायल के लोगों का हार्दिक आभार व्यक्त करता हूं और इसे 140 करोड़ भारतवासी और भारत इजरायल मित्रता को मैं समर्पित करता हूं। फ्रेंड्स, हमारे संबंध गहरे विश्वास, साझा लोकतांत्रिक मूल्यों और मानवीय संवेदनाओं की मजबूत आधारशिला पर आधारित है, उस पर स्थापित है। हमारे रिश्ते समय की हर कसौटी पर खरे उतरे हैं। आज हमने अपनी टाइम टेस्टेड साझेदारी को स्पेशल स्ट्रेटेजिक पार्टनरशिप का दर्जा देने का ऐतिहासिक निर्णय लिया है। यह निर्णय दोनों देशों के लोगों की आकांक्षाओं का प्रतिबिंब है। फ्रेंड्स, आज की बैठक में हमने अपने सहयोग को नई दिशा और तेज गति देने पर चर्चा की। हमारा आर्थिक सहयोग ग्रोथ, इनोवेशन और शेयर प्रॉस्पेरिटी का इंजन बना हुआ है। आपसी निवेश को बढ़ावा देने के लिए हमने पिछले वर्ष बायलैटरल इन्वेस्टमेंट एग्रीमेंट किया। हम शीघ्र ही एक म्यूचुअली बेनिफिशियल फ्री ट्रेड एग्रीमेंट को भी अंतिम रूप देंगे। टेक्नोलॉजी हमारी भावी साझेदारी का केंद्र है। आज हमने क्रिटिकल एंड इमर्जिंग टेक्नोलॉजी पार्टनरशिप स्थापित करने का निर्णय लिया है। इससे एआई, क्वांटम और क्रिटिकल मिनरल्स जैसे क्षेत्रों में सहयोग को नई गति मिलेगी। मुझे खुशी है कि इजरायल में यूपीआई के इस्तेमाल के लिए समझौता किया गया है। डिजिटल हेल्थ के क्षेत्र में भी हम अपने अनुभव साझा करते हुए लोगों के जीवन में सुधार लाने के लिए प्रतिबद्ध हैं। रक्षा के क्षेत्र में हमारा दशकों पुराना विश्वसनीय सहयोग रहा है। पिछले वर्ष हुए एमओयू से इसमें नए आयाम जुड़ेंगे। हम मिलकर जॉइंट डेवलपमेंट, जॉइंट प्रोडक्शन और ट्रांसफर ऑफ टेक्नोलॉजी की दिशा में आगे बढ़ेंगे। साथ ही हम सिविल न्यूक्लियर एनर्जी और स्पेस जैसे क्षेत्रों में भी सहयोग आगे बढ़ाएंगे। फ्रेंड्स, दोनों देशों के बीच कृषि सहयोग का लंबा और सफल इतिहास रहा है। आज हमने इस सहयोग को फ्यूचरिस्टिक दिशा देने का संकल्प लिया है। इजरायल के सहयोग से भारत में स्थापित सेंटर्स ऑफ एक्सीलेंस हमारी मित्रता के उत्तम उदाहरण है। इनकी सफलता देखते हुए हमने इनकी संख्या 100 तक ले जाने का 100 तक ले जाने का लक्ष्य निर्धारित किया है। इस दिशा में एक कदम और बढ़ाते हुए विलेजेस ऑफ एक्सीलेंस बनाने पर भी काम कर रहे हैं। इससे इजरायली टेक्नोलॉजी भारत के गांव-गांव तक पहुंचेगी और लाखों किसानों की आय और उत्पादकता में बहुत बढ़ोतरी होगी। हम मिलकर फ्यूचर रेडी फार्मिंग सॉल्यूशंस भी विकसित करेंगे। भारत में इंडिया इजराइल इनोवेशन सेंटर फॉर एग्रीकल्चर की स्थापना इस सहयोग के लिए मजबूत आधार प्रदान करेगी। फ्रेंड्स, हमारे पीपल टू पीपल टाइज हमारे संबंधों का एक महत्वपूर्ण स्तंभ है। 2023 में हुए मैन पावर मोबिलिटी एग्रीमेंट के माध्यम से भारत ने इजरायल के कंस्ट्रक्शन और केयर गिवर सेक्टर्स में महत्वपूर्ण योगदान दिया है। भारतीय कामगारों ने अपनी मेहनत, प्रतिबद्धता और कौशल से विश्वास अर्जित किया है। मुझे खुशी है कि इस सहयोग का विस्तार कॉमर्स और सर्विसेज जैसे क्षेत्रों में भी किया जा रहा है। दोनों देशों के युवाओं, रिसर्चर्स और इनोवेटर्स को जोड़ना हमारी मुख्य प्राथमिकता रही है। इस दिशा में आज हम इंडिया इजराइल एकेडमिक फोरम की स्थापना कर रहे हैं। फ्रेंड्स, आज हमने क्षेत्रीय एवं वैश्विक मुद्दों पर भी व्यापक चर्चा की। क्षेत्रीय कनेक्टिविटी को बढ़ावा देते हुए हम इंडिया मिडिल ईस्ट यूरोप इकोनॉमिक कॉरिडोर आईमैक और इंडिया इजराइल यूएई यूएसए यानी I2U2 पर नई गति से आगे बढ़ेंगे। फ्रेंड, भारत और इजराइल पूरी तरह से स्पष्ट है कि आतंकवाद का दुनिया में कोई स्थान नहीं है। किसी भी रूप में, किसी भी अभिव्यक्ति में आतंकवाद को स्वीकार नहीं किया जा सकता। हम कंधे से कंधा मिलाकर आतंकवाद और उनके समर्थकों का विरोध करते रहे हैं और आगे भी करते रहेंगे। पश्चिम एशिया में शांति और स्थिरता से भारत के सीधे सुरक्षा ही जुड़े हैं। इसलिए हमने शुरुआत से ही संवाद और शांतिपूर्ण समाधान का समर्थन किया है। यही ग्लोबल साउथ और पूरी मानवता की पुकार है। भारत की सोच स्पष्ट है। ह्यूमैनिटी मस्ट नेवर बिकम अ विक्टिम ऑफ कॉन्फ्लिक्ट। गाजा पीस प्लान से शांति का एक रास्ता बना है। भारत ने इन प्रयासों का पूर्ण समर्थन किया है। भविष्य में भी हम सभी देशों के साथ संवाद और सहयोग जारी रखेंगे। एक्सेलेंसी, माय डियर फ्रेंड, आपकी आत्मीयता और गर्मजोशी ने मेरी यात्रा को यादगार बना दिया है। मैं एक बार फिर आपसे और इजराइल के लोगों से जो प्यार मिला है, जो स्नेह मिला है, जो सम्मान मिला है, इसके लिए हृदय से बहुत बहुत आभार व्यक्त करता हूं। बहुत बहुत धन्यवाद। तोदा रब्बा।
That was the official joint statement of Prime Minister Narendra Modi and Prime Minister of Israel Benjamin Netanyahu. India and Israel viewers today signed several memorandum of understandings in Jerusalem, deepening cooperation across defense, technology, science, trade and people-to-people exchanges. During Narendra Modi's state visit alongside Benjamin Netanyahu, the agreements were inked as part of a broader strategic talk, reflecting growing and bilateral ties and discussion on future collaboration in strategic sectors. PM Modi also spoke about an upcoming FTA very soon, and he also said that humanity should never be subject or a piece of conflict. That's all the time we had on this edition of this show. Stay tuned. This is Malika Mishra. Keep watching NDTV Profit.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
साउंड चेक हो गया? विजुअल्स रेडी? लाइट्स ओके? एवरीथिंग इज रेडी? वेट, आर यू रेडी? ये सिर्फ एक कॉन्सेप्ट नहीं है. दिस इज माई लाइफ. दिस इज माई स्टोरी. वन नाइट, नो रिपीट्स. बुक योर टिकट्स नाउ.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Hi viewers, welcome back. This is Malika Mishra. You're watching Profit 360, a show that gets you all the latest updates on markets, national as well as international news. Let's go straight to the day's market action. Benchmarks closed flat with Nifty ending below 25,500 after sharp moves seen throughout the session. Sectors ended on a mixed note with the defense index rising as the top gainer, while Nifty Financial Services fell for the second day in a row as the weakness in financial stocks outweighed continued recovery in information technology. In fact, let's go across to my colleague Jasmeet for a quick wrap of what happened through the day.
Nifty ends flat in today's trade. If you look at the overall picture, Nifty ends just below the 25,500 mark and up about 0.06% in today's trade. While Trent and Eternal lead the overall fall in Nifty today, down about 1.5%, while Tata Motor and Eicher lead the gain in Nifty, up about 2%. The broader market ends on a mixed note. If you look at the Nifty Midcap 150, it's up more than 0.5% today's trade. And what led the gain in Nifty Midcap 150 is Mankind Pharma among the top gainers, which has gained over 4% today's trade. While Nifty Small Cap 250 also ends flat in today's trade, and we have overall Sagility and Home First, which fell the most in Nifty Small Cap 250, both down about 5%. If we look at the sectors end on a mixed note. Nifty Pharma gains over 1% in today's trade, while Nifty Media becomes a top loser, ends about 0.5% lower in today's trade. While Tips Music lead the fall in Nifty Media, down about 2.5% today, while lastly Nifty Financial Services fall for the second day in a row.
Being straightforward, headwinds in the IT services space is real. This is the view of Vikas Parshad of M&G Investments. In a conversation with us earlier today, the equity expert highlighted that while some mid-cap names have been unfairly punished due to the SaaS apocalypse, he is still underweight IT. Listen in to his rationale on why he thinks so.
There are some small and mid-cap companies in particular in India that have been, we think, unfairly punished. Some tech platforms, some IT services that are listed in India but have a majority of the customer base abroad, but are very different from the heavyweight benchmark components that everybody is focused on. So again, we are seeing opportunities in this. There are some stocks that are down 20 to 40% just in February, as this SaaS apocalypse, as some people are calling it, has taken root all around the world. But if you just focus on the IT services sector, the revenue headwinds are real. The cost structures are still high, given what might happen or the revenue opportunities that we might see in the next couple of years. So we remain underweight the IT services sector here.
Viewers, with that being said, Indian IT stocks like TCS, Infosys and HCL Tech have been in focus after global tech giant Nvidia reported another blockbuster Q4 with quarterly revenue surging to about $68.1 billion. This was driven by strong AI chip demand and data center spending. Nvidia's results bolstered global tech sentiment, lifting the Nifty IT index nearly 2%, which is its second straight session of gains after recent weakness. Nearly all major IT stocks traded higher, reflecting renewed optimism around the AI spending cycle and services demand that could benefit Indian IT exporters. But moving on, let's now put the spotlight on the defense space, which has been gaining in trade today. Most defense stocks are on the rise as investor interest solidifies ahead of a potential India-Israel defense deal. Shares of defense companies like Bharat Electronics, HAL, Cochin Shipyard, Mazagon Dock and Garden Reach Shipbuilders have all been trading with gains of anywhere between 0.5% and 2%. Nifty India Defence Index itself has been up and high in the green today, but as per media reports and also the joint statement that we just heard, PM Modi's visit to Israel this time is likely to go beyond just the realm of defence and could and should transpire into high-tech and AI fields as well. But again, now speaking of an international story that has caught investor attention as well as global headlines, US federal judge has ruled that the Trump administration's third country deportation policy is unlawful, dealing a setback to the broader immigration crackdown. The policy adopted in March of 2025 allowed rapid deportation of migrants to countries other than their home states with minimal notice without giving them a meaningful opportunity to object. U.S. District Judge Brian Murphy said the policy violated due process protections and declared it invalid. He paused the ruling for 15 days to allow for an appeal. The decision underscores ongoing legal challenges to current immigration enforcement rules. But that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for all the news and updates. This is Malika Mishra. Thanks so much for watching.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa, 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 Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, gold has been one of the stellar investments to make over the course of the last few years, particularly over the last 24 months or so. And that's because international gold prices have been going through the roof. Now, I've had multiple conversations, not on this program, but in general with people who say that they invest in gold, but they invest through digital gold. And if you're wondering what that is, we're going to discuss it. But the reality is that you actually had the Securities and Exchange Board of India come out in November of 2025 saying that this is not something that falls under its regulatory ambit and as such is an unregulated product. Is that something that should worry you? Are there better alternatives out there? We'll talk about your strategy when it comes to investing in gold at the start of today's program. Joining me is Harshvardhan Rungta, CFP and co-founder of Rungta Securities. Harsh, thanks so much for taking the time and pleasure having you as always. Let me start by asking you about the definition of digital gold. What is this product? How does it work?
Hi, Alex. It's always a pleasure to be on your show. Well, it's a very important topic that you've brought up. Why? Because especially because we've seen the gold prices now shoot up in the last 1 year, and we've seen the increasing interest of investors to park money into gold. Now, there are several options through which an investor can invest into gold. Now, the popular ones, of course, are known. What we're talking about right now, what your query is specific to, is digital gold. So there are a few organizations who are offering the convenience of investing into gold, but in a digital form, which means that you will have a wallet kind of a structure on your mobile app, wherein you can buy fractional gold. So you can say, I want to buy 100 rupees worth of gold. It need not necessarily be in grammage. It need not be 1 gram minimum, etc. You have to specify the amount that you want to invest. So you could say, I want to invest, say, 100 rupees for that matter. I want to invest 500 rupees. So you'll be allotted gold in your mobile wallet equivalent to that much money that you're investing, under the promise that the respective gold is lying in the vaults of the organization that is providing this service. Now, you also have an option going further in case you want to convert this this money that you have in the form of the gold allocated to you in the form of a wallet allocation. You want to convert that into physical gold, that option is also available by some of the providers who are providing this option. So this essentially is one is coming under the SEBI, it's troubling SEBI, if I may put it so. And hence SEBI came out with these regulations to specify and to clarify rather, saying that if anything goes wrong with you while you're investing into digital gold through these organizations, then SEBI is not the regulator for these products. So in case of any grievance, you cannot, SEBI simply saying, don't come to us.
Got it. So let's talk about and just want to understand how this works, right? Harsh, you have some insight into this with regard to the organization that backs the prices of gold when it comes to these digital products. Who ensures that there is, how do you know for a fact that there is actually physical gold available to you? Some of these organizations have tie-ups that facilitate that, right? So how does it work?
So Alex, that's exactly where the cause of concern also draws in. Okay, so let me use one analogy and explain to you. We'll explain and we'll compare this setup with ETFs. Okay, so where there is a gold ETF offered by, say, a mutual fund, the fund house has physical gold lying to the extent of the outstanding units that are being created. So, for example, if there are 1 ton of gold in the form of ETF units, which have been invested, have been given to investors, 1 ton of physical gold will be lying in the warehouse of the mutual fund. So, mutual fund appointed warehouses, there would be 1 ton of physical gold lying there. Now, who oversees all these things and who ensures that there is regulatory oversight on all this is SEBI in this particular case. So investors have that confidence saying that there is a regular audit being conducted by somebody else. There are certificates, there are regulatory oversight. SEBI is going to look into it. If you have any grievance, you write to SEBI. SEBI will take that up because they are regulating the mutual fund industry. Now come to digital gold. Now, digital gold, that's exactly what SEBI tried to explain, saying that we are not regulating any organization that is offering you digital gold. In case there is something that you have, don't come to me. Now, what are they trying to imply? Now, this entire industry offering digital gold is under the self-regulatory mode right now. There is no organization, there's no regulatory body that is overseeing these, the functioning of these organizations, which means in case you have, well, I'm talking about an extreme case, I'm not saying this is a general case. So in case, say as an investor, you have been buying into digital gold of one particular organization and in your wallet, you see that you have, say, probably 100 grams of gold that you accumulated over a period of time. Now, it is only on the trust of that organization that you're dealing with that you believe that they have 100 grams of gold in your name lying in their vaults. There is no regulatory oversight. Now, those organizations on their own to display solidarity have hired auditors and they've come out with reports saying that, look, there is somebody looking into our warehouses and are certifying that there is gold lying there. Now, how much do you trust the organization and the third-party auditor, etc., is individually to the responsibility of the investor. Now, let me point one example which needs a point of caution, and it's important for investors to know. In any business activity where there is no regulatory oversight and your dependency is entirely on the morale and on the disclosures of the organization, is something that investors would really need to be very careful about. Let me give you an example, and a classiest example in this case would be a case of National Spot Exchange. Okay, this is one exchange that was under the regulatory oversight of the Forward Markets Commission. It was an exchange in that point. Now, the scam that opened up in 2013, it was to the surprise of everybody saying, so it was an exchange that was supposed to hold commodities against which trading was happening. Now, when the scam opened out, it just simply said the warehouses were empty, right? And in the entire period of operations, the exchange continuously gave warehouse receipts. They made declarations saying that there are stock lying in my warehouses, etc. So when you come into a scenario like this, where you had an experience in the past, where a national spot exchange under the regulatory supervision of Forward Markets Commission, making all self-declarations, later on you find out there is nothing in the warehouses. How much do you think you could trust somebody or an organization for that matter who on self-declaration is saying that I have gold which you bought lying in my warehouses?
Particularly, Harsh, when there is an option available that gives you a guarantee that is backed by a regulator. So nobody is saying that the organizations that are offering these products are false and they're lying to you. It's just that regulations don't yet exist. And so in the absence of regulations, you might as well go to a regulated product. So from that perspective, let me ask you about this, because people continue to wonder about ETFs having the commodity to back whatever is invested, which is why I've had conversations with people who invest in physical silver as well, thinking that, no, I don't trust that the silver ETF actually has silver. So in your opinion, my understanding from what you've said so far, Harsh, is that you don't like the idea of investing in digital gold. So Where should you invest and why?
Yes, so Alex, you're absolutely spot on when you say that if I'm comparing the negatives that are potentially there in digital gold, I'm directly comparing it with something that I have as an option as an investor in a regulated field. Now, if I didn't have a regulated option, then I may want to consider digital gold for that matter. So I'm saying while I have an option to invest into a regulated product under the supervision of SEBI, then I rather take that. Now, answering your query, if an investor has a doubt that I'm investing in a silver ETF of a mutual fund, and I don't think that they have equivalent amount of silver lying in their warehouses, then it is better that that person goes and buys into physical silver. It's similarly, and I'm also assuming the same investor will also not buy into any equity or debt fund of that mutual fund because they are not going to see the shares that are being held by that mutual fund, right? So if they do not have the confidence of a regulated industry like a mutual fund being supervised by a super regulator like SEBI, then I think that investor most certainly should buy physical silver and should not also invest into mutual funds at all. Because if you're investing in a mutual fund, the fact sheet states that the scheme is holding underlying securities. And if they don't trust that they have underlying silver, they should not trust that they do not even have the shares in their account for that matter. So I think it's a bit of an exaggeration when a person inclines to say that I don't believe that probably a Kotak mutual fund will have equivalent amount of silver in their warehouses or an HDFC or a Tata mutual fund will not have that. I think it's a bit of an exaggeration. It's equivalent to a person asking a doctor if a medicine has side effects and that person is eating street side food and very happily enjoying it. So it's about where you want to doubt people, you will continue to doubt. And if you want to trust somebody, you will trust even without having any valid reasons for believing otherwise.
Okay. So then in order of preference, let me lay it out to you, right? You have ETFs, gold ETFs, you have gold and silver ETFs, you have gold mutual funds, which do not require you to have a demat account. You have multi-asset funds, some of which have a pretty sizable allocation towards commodities, at least 10% in most cases. And you have digital gold as an option, right? So in order of priority, in your opinion, and then you have physical gold also, how would you rank them?
So see, one, for me, I'll go with the method of elimination to start with. So one is digital gold is completely out of the equation as of now, only because it has no regulatory oversight. The moment it falls under some regulatory oversight, I think that's an option investors can continue to have. Other than that, whether to pick in paper form again, I'm talking about ETFs and gold funds would largely depend on the convenience of the investor. So if an investor is convenient, it's easy and it's comfortable rather, with buying into ETFs directly on the exchange, maintaining the records of purchase and buying, he knows the difference between the traded price and the INAV. So if they're okay with all of that, you may most certainly pick up an ETF. If not, you don't want to bring them into units in their demat account. You want it to be automated in the form of an SIP, etc. Mutual funds offer the gold fund option, which is also very good. So eventually the objective is what? That you want to benefit out of the price rise of the commodities. So you have a silver fund exclusive, you have an exclusive gold fund, you have a gold and silver fund. All those options are available. Now with regards to whether you should take one over the other, as I said, it's purely depending on how comfortable you are dealing with ETFs directly or you want to come in the mutual fund space. Comparing it to now physical gold is that, there are certain parameters you need to keep in mind. Physical gold needs to be secured and, stored, and there's additional cost of that by yourself. So which you will most certainly want to consider whether you want to do that or you just want to leave it and you want to gain from the price rise of gold and silver, which you can make even when you invest into paper gold. So choice between ETFs and gold funds, I've explained. If choice between paper gold and physical gold, which is the ETF mutual fund versus the physical gold, I think it's to do a lot with the convenience and the comfort level of the investor.
And finally, multi-asset funds, you've seen the kind of flows into them. And part of that, I would think, is because of the ongoing gold rush. In a sense, I think, Harsh, given the volatility of the metal that we've seen in the recent past, it's not a bad choice for people that are going for a taste of gold and silver with the ability of a fund manager to take a tactical call much, much quicker and much more efficiently, perhaps, than an individual would.
Yes, Alex. So, with regards to multi-asset funds, the advantage being that, there is an automatic allocation to precious metals as well. So that is equity, debt, REITs, commodities, everything fills into one product. And the good part is that the rebalancing happens automatically and you are not as an investor involved in it. So say hypothetically you started investing in an XYZ multi-asset fund. That multi-asset fund's mandate is that they will invest say 10% into commodities. They'll have equity, debt, and other things, as a particular allocation. Now, the moment this allocation changes with gold prices probably doubling, say for example, the gold prices double, and the fund had 20% allocations toward gold, their mandate says that, look, I need to have 10%. So they will automatically rebalance it. They will sell some gold and they will buy into equity or debt for that matter. So this rebalancing also automatically happens for an investor in a multi-asset fund. And yes, most investors are, like all of us, being individuals and humans, we are very emotional. The moment prices go up, and we keep listening to stories saying that it go up further. And when it starts falling, we believe that it's going to never stop falling down. So we are very driven by our emotions. So if we want to overcome that bias that we have, it's best to go into an automated mode, which is a multi-asset fund, wherein somebody else takes that decision based on predefined allocations. I think for those who want to have allocations to precious metals and do not want separate funds for it, can most certainly look at the multi-asset funds.
And finally, not a recommendation, but just quickly asking you for a few names that you've looked at, both in the ETF space as well as in the multi-asset fund space, because there are several strategies in the latter that people might not know about. So things that stand out to you, names that stand out to you, Harsh?
So I think any fund, whether ETF or the underlying gold fund, would need to have sizable AUM because see, ultimately, if a gold fund also invests into an ETF, right, of the same fund. So say, for example, ICICI Gold Fund will invest into gold ETFs of ICICI itself. So ultimately, the liquidity is going to come from the AUM that the fund manages. So the larger the AUM in the ETF is definitely going to have a better price discovery and liquidity for you. So, I mean, that is one of the parameters, of course. The others being there's a tracking, you have to make sure that it tracks the returns of gold as closely as possible. Putting all these together, not to confuse anybody too much, I think just pick some large fund houses with the largest AUM. Start with that. That would be one criteria that you could use to filter as to saying which AUM, which AMCs I want to invest with. So the big ones like an ICICI, Kotak, Nippon for that matter, ABSL, Tata, these are the ones that you could consider for your gold allocation into mutual funds or ETF.
Got it. Okay. All right. On that note, Harsh, thanks so much for taking the time. Pleasure speaking with you as always.
My pleasure, Alex. Thank you.
An important update has come through from the Securities and Exchange Board of India with relation to mutual funds and how they are classified. This is a notification that came through, and in that, the SEBI has removed the solution-oriented funds category. And this is for retirement funds, as well as for children's education funds and a couple of others. It's removed that category, and that has been replaced by what is called a life cycle fund. Now, the purpose is similar, but the definition has gotten broader. They don't need to necessarily specify that this is a children-oriented fund or this is a retirement-oriented fund. The interesting part is that it has a lock-in of anywhere between 5 years to 30 years. So it's a pretty wide range. And there is also a stipulation on how this fund will have to be constructed, and that it will have a certain allocation towards equity, a certain allocation towards fixed income, and potentially a certain allocation towards commodities and thereby gold and silver as well. So that will change over the course of the life cycle of the fund, and there will be an automatic glide path where over a period of time, your equity allocation keeps going down. Now, hypothetically, this is an interesting scheme to consider. And of course, it remains to be seen how mutual funds interpret this and what solutions they provide. But I personally am not too keen on the idea of this restrictive kind of investing, because ultimately you're investing for the purposes of something that you will need the money for. And you should always have access to the money. The argument here is that people are not disciplined with their money, and as a result should not be given the option to remove money beforehand. But I think that everybody listening into this program is well aware of what they're saving their money for, and so therefore can make their choices as is. I'm not saying that this is not a good category. I'm essentially saying that this is something that is meant for people who don't want to spend too much time thinking about when to redeem, and they've got a purpose which is at least 5 years away and sometimes possibly even 15, 20 years away, which is a very long time to plan for. It is an interesting product. Let's see how it pans out. You've heard of insurance being bundled with mortgages. Now, the question that I'm asking today is this a regulatory requirement, or is this more of a suggestion that it's good financial planning to have a life insurance cover when you are getting a large home loan? That's the question that I'm asking. I'm also asking the difference between a pure term cover and what is called a home loan insurance policy. Joining me to talk about this is Vivek Jain, the CBO of Life Insurance at Policy Bazaar. Vivek, thanks so much for taking the time. Let's start with that.
Hi, Alex.
Pleasure. Is this a regulatory requirement, or is it often sold together to a mortgage taker?
So, Alex, it is not a regulatory requirement to take a bundled a cover along with a mortgage, but it is obviously advised to always cover your liabilities with a term insurance plan, so that in case of any mishappening to the earning member of the family, the asset is kind of protected and the outstanding loan or the liability can actually be paid off through the term insurance cover.
Okay, so well answered. And so therefore, obviously, it's important to have this term insurance because you don't want to lose the asset. In this case, you don't want to lose the house, right? Because the house ultimately is the collateral that is given for mortgage and for loans of that sort. So let's talk about this, because there is a home loan insurance and there is a term insurance. What is the difference between the two?
Home loan insurance, or actually credit life as it is popularly known, a lot of times customers end up buying a bundled product along with the loan that they are buying, right? Which is typically a group term insurance plan. And you kind of say for a 1 crore kind of a loan, you end up paying anything where between 3 to 4 lakhs additional for that insurance. And that kind of gets added to your home loan. Versus buying a term insurance, you have the flexibility of buying from different companies, and it is far more cheaper because it is a retail plan, so it doesn't attract any GST. So there is a clear difference of about 18%. Plus, you can pay in a monthly mode fashion and keep it till whenever your loan actually lasts.
Interesting. So what you're saying is that instead of buying it, and this is kind of like a motor insurance as well, right? Kind of, not exactly. But if you go to a dealership and you buy a policy when you're buying a car, you will often be priced higher than if you bought that same policy online. And a lot of people don't know that they can actually do that as well. They don't necessarily have to buy the policy at the dealership. So this is kind of like that. You don't have to take the policy, the life insurance policy, the term insurance policy at the bank where you're getting the loan from. You can actually buy it online. You get a much better deal. Is that how it works?
Absolutely. I think you're bang on. So I'll just explain it with the example I was referring to. See, say you are a 30-year-old and you take a home loan of say 1 crore, right? If you take a bundled credit life plan, there you will end up basically paying 3 to 4 lakhs, anywhere between 3 to 4%, which is about 3 to 4 lakhs getting added to your home loan account. And you will basically, that will translate at an 8% interest rate. I'm just taking an example. Translate into about 2,200 to 2,500 of monthly premium. Whereas if you take the same plan, a same term insurance plan with a reducing cover, that would cost you about 700 to 800 rupees monthly. So there is a clear difference of almost 2 to 3 times when you buy it online or separately versus buying it as a bundled product.
Okay.
And added to that, you have the flexibility of choosing the insurance company that you want, choosing the pay term or policy term you want. You have a lot more flexibility versus when you're buying it as a bundled product, you may actually not get options and you may have to end up buying one product that is available with that.
Okay, good point. Vivek, just a last point that I want to raise with you, which is that in an ordinary case, right, if hypothetically I were to go out as a 30-something-year-old and buy a property and I already have a term policy and it is robust enough, then there is no need for me to go out and buy an additional term policy. Is that fair?
So yeah, if you have a very good life cover, right, typically in the range of 10 to 15 times of your annual income, then you are broadly covered financially in case of any mishappening. So then you can avoid taking this, but I would still recommend, because it is fairly cheap and you can actually supposing you're taking the loan for 20 years, but you end up closing it earlier in 7 to 8 years, you can actually stop paying for that term insurance, right? So in a way, you can maybe, because it is an added liability over and above your other expenses. See, finally, term insurance is is income replacement, right? The term insurance that you would have bought would be to replace your income in case something happens to you. Given this is an additional responsibility, you can take a add-on cover, but you're right, if you think that you are sufficiently covered already, you can skip it altogether.
Got it. All right. On that note, Vivek, thanks so much for taking the time. Pleasure speaking with you.
Thank you. Thank you so much, Alex.
All right, that brings us to the end of this edition of Your Money Matters. Thanks so much for watching. This is NDTV Profit.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Conversation on Talking Point. Vikas Prasad, Portfolio Manager, Asian Equities M&G Investments, joining in this morning. Vikas, thank you so much for speaking with us. It's always a pleasure. Let's start with something which has been on top of mind for markets. I'm wondering whether you think the AI scare is overblown to some extent from the Indian market perspective, or is this a problem that is going to keep dogging momentum as far as Indian equities are concerned?
You're back. Good to see you in the studio, not in the snows of Davos. I was in the studio the last time we were there. On the AI, as you know, we are long-term investors. We're very stock-specific. However, we do think that these AI headwinds are quite real for a large portion of the Indian benchmark. We have remained underweight the IT services sector throughout 2025, to start 26, and also now. There are some small and mid-cap companies in particular in India that have been, we think, unfairly punished. Some tech platforms, some IT services that are listed in India but have a majority of the customer base abroad, but are very different from the heavyweight benchmark components that everybody is focused on. So again, we are seeing opportunities in this. There are some stocks that are down 20 to 40% just in February, as this SaaS apocalypse, as some people are calling it, has taken root all around the world. But if you just focus on the IT services sector, the revenue headwinds are real. The cost structures are still high, given what might happen, or the revenue opportunities that we might see in the next couple of years. So we remain underweight the IT services sector here.
You're underweight IT services sector, and everything that we're hearing and seeing from all of these companies to convince investors that they are going to be AI ready, the deals that they're cracking with some of these large companies, whether it's Anthropic or OpenAI, these partnerships, not convincing you, Vikas?
It's a little bit too little in the short to intermediate term. These things will take time to play out. But it's not just about the revenues. And some companies did have healthy backlog growth, or order book growth in the most recent earnings season. But when you look at the cost structures also, some of the companies have issues there. It's hard to identify operating leverage to come, positive operating leverage to come. And then there's a question also of what do you want to pay for a business like this, or businesses like these today? Many of these companies are trading at the lower end of their forward PE multiples in the post-COVID world. But if you look at them, many of them are towards the high end of the decade prior to COVID, before tech spending really took off when everybody was sitting at home. And we're looking at things not just in the 2, 3, 4 year context, but over the last 15 to 20 years as well. What I should add is we're very aware that all these companies that have been listed since the late 90s, early 2000s, have reinvented themselves many times. After Y2K, after the GFC, during COVID, and it's possible that they can do it again. But this environment is different than what they have had to deal with in the past.
Because sorry, extending that point further, but and good morning to you. But could it well happen that it will not be a single shade painting all companies, and there will be some which could turn out to be winners, and there will be some that turn out to be extreme losers in this wave. So net, could selective bottom-up value buying happen within the IT space? Are you also doing that?
Yes. So yes to both of those questions. There will be some dispersion, or a lot of dispersion, actually. And we see more opportunities for now beyond what are traditionally called the IT services companies in India, but tech-based companies that have genuine moats. There's a lot of work that we have done and others have done also to identify what really is a moat in this AI world. Having proprietary data is a very big moat. And companies that are integrating the APIs from various LLMs, from various world models over time, they have an advantage over simple or simpler transaction processors that don't have proprietary data. And over the past 2 weeks, we have selectively added to our holdings where we think that there are moats, with the proprietary data being a big driver of that.
Okay. Because the other thing is this almost lackadaisical move that we see, and not just for 2026, for better part of 2025 because of FI selling, that was indeed the case. But no matter what the trigger might be, no matter how solid the macro may appear to be, no matter the fact that Q3 was not a bad quarter, in fact was a pretty decent quarter, there seems to be this lack of follow-through buying happening despite the SIP flows continuing. What will it take for the markets to start performing? Or do you believe the headline Nifty may stay stable and it will be specific pockets only that will show performance in 2026?
Well, there's two parts to my answer. First, when I was in the studio last month, it was just before my trip to England to meet a series of clients, and the feedback was actually quite encouraging on India. This time last year, I met many of the same clients. The question seemed to be, why India? Now, after near 50% repricing of India relative to other emerging markets, it's now become, why not India? And our response was that the drivers of this market had made it the best performing market in the world for about a quarter century, compounded at about 14% a year in local currency terms for almost 25 years. Those drivers remain intact. Meanwhile, we've had this material reset in pricing relative to emerging markets, so that's helpful. But it will always be stock specific. It will be a good home for active management. In the short term to medium term, it's hard to see the flows reversing. Yes, we've seen more buying by FIIs in February, but you look at the Korean market, going back to Liberation Day last year, the KOSPI 2 index has tripled. It was up 90% last year. It's up another 50% just year to date in 2 months. This is the overall index. And we've seen a lot of companies that are part of the AI supply chain that still do not look demanding on valuations go up 100% to 200% year to date already. And when you have that opportunity set available in South Korea, in Japan, in Taiwan, it's hard to see investors rushing back to India. But stocks follow earnings. India for a long time has been the highest growth market in the world in aggregate, and then by sector after sector. And we see that remaining intact for the next couple of decades at least.
Vikas, what are you then spotting in the Indian equity ecosystem right now? Is it time to look at non-IT, non-AI disruption kind of businesses, more maybe EPC, infra facing companies, and maybe consumption? Is that something that you're finding interesting? What really are you looking at right now from an Indian perspective?
That's a fair question. And to your point, we've seen a lot of positive developments that should be supportive of the Indian market over the past month. We saw the EU-India trade deal, starting the US-India trade negotiations, and that deal as well. I thought that the budget had some good things for long-term equity investors. Yes, there's some noise around capital markets and trading-related companies in the short term, but that has proven to be an opportunity. We are overweight in healthcare-related names, very broadly defined. That includes services, that includes medtech. I would encourage investors to spend time on healthcare services here. That's a largely domestic story. You have in India a market that, in a world that is increasingly interconnected and linked, has over 70% of revenues for the NSE 200 coming from domestic sources. And that number is growing. Whereas for the S&P 500, the number is less than 60% domestic revenue. That number is falling. So you have a lot of very domestic stories. Healthcare is a good place for that. The manufacturing story is a good place for that. Auto components, looking beyond the two-wheelers and the CVs and the four-wheelers, where we do have exposure. But in the auto component sector as well, there's a lot of opportunity there. That's a broader and deeper universe of companies than I think many investors realize. So healthcare, manufacturing, defense is still interesting to us. There's been some volatility there this year. But on the long-term view, we remain constructive on defense, just as we have been for the past few years. And it's not because we have been, we're looking forward and we see opportunities in defense as well.
Defense, would you say that some of the core defense names are not overly valued and more opportunities exist? What are the kind of defense companies you're looking at right now, Vikas, and same for auto anchs?
On the defense side, less software, more component companies, and there's many of those. I'll be visiting some of them soon in India. India has the largest and most liquid and deepest pure play defense ecosystem in Asia. So there's a lot of opportunities for investors there. I do think that earnings estimates on a 2 to 3 year view remain low compared to where they will be relative to earnings delivery for the next 2 to 3 years. And this is up and down the market cap curve. And you asked about the manufacturing sector.
Auto ancillaries.
Yes. So we're going to see domestic demand as a key underpinning of the earnings growth here, but we're also going to see more export opportunities, more international related demand as well for a lot of these companies. And yes, over the past year, especially going back to Liberation Day, many of these companies have done very well. But relative to where they will be, a lot of these market caps are still very small. The valuations are not demanding. On the IPO front, we're seeing some high quality IPOs come here. Last year, we only invested in 3 IPOs out of the near 400 IPOs that there were. And 2 of them were in the healthcare space and 1 was in the auto ancillary space. And so we continue to like both of those.
Vikas, did you play the commodity upcycle via equities, and are you still inclined to play it?
We have had exposure to that over the past 2 years. We have had exposure to cement, to steel, to aluminum and copper. Cement is one area where we have lessened our exposure in recent months, but we still have exposure to other parts of the commodity cycle. If you broaden the conversation and you look into construction, building materials, that's also another area that we're spending time on. This again is a very domestic story. The one I was asking earlier about infrastructure, CapEx, if you look at pipes, cables and wiring, those companies have done well. The multiples might look pretty full on a 1 year view, but we are doing our work there. And perhaps next time we can talk about some newer exposures in those sectors. But for now, yes, we still have exposure to the commodities, steel in particular.
Okay. So continuing that exposure, if you will. I presume, Vikas, what you're also trying to say is that stocks which benefit out of copper, zinc, etc. rising, selectively you still have exposure and will continue to have exposure to them.
Yes, I should highlight that we have very strict filtering mechanisms for sustainability, for coal and all that. But yes, we like what we own in the commodity spaces.
Very interesting. Okay, great. Vikas, lovely talking to you. The next time we'll broaden this conversation, as you said, hopefully maybe in our studios. But thanks so much for joining in today.
Thanks so much.
With Sachin Desai, MD of Investments at Mosaic Asset Management, and Rubin Chedda, MD and Head Special Situations Credit Fund at Neo Asset Management. Gentlemen, both of you, thank you so much for joining in. And the genesis of this is every day wake up to a fear of what disruption can AI cause. And in the Western world, AI disrupting the tech world, and therefore some of the lending that is being done by the private credit industry to this space is going to be challenged. That's the narrative, and everybody's subscribing to it. Sachin, Would you subscribe to that or no? Why?
Yeah, basically, the thing is, I think no one really knows in the ultimate analysis how this will play out. What has happened is that you have these very capable AI models and the agents that say cloud has released, and they are able to kind of automate, or you can say wipe code some of your workflows. A lot of the software that otherwise used to come via SaaS can be done in-house. And the fear is that more and more companies will maybe just hire a bunch of experts slash maybe even part-time coders and do in-house a lot of stuff which otherwise had to be done professionally, and where it was a per seat kind of an arrangement in terms of SaaS with annual increases. The detractors, on the other hand, are saying that no, this is not the case because this is enterprise-grade software where data integrity, compliance, regulatory compliance, etc., is very, very important. So people are not just going to wipe their way to enterprise-grade software. And yes, AI will add a layer which will be very useful, but that is something that has to be necessarily done by experts, either SaaS companies. I think the market is kind of in what you could call in economic terms a Knightian uncertainty. You do not really know how this will play out. So whatever growth and PE multiples were baked into the companies, valuations have kind of come down drastically. Maybe the fear is well-founded and the companies deserve lower valuations. Maybe the fear is...
And Rubin, I'd like to get you in this conversation. One part is the valuation, but the other part is that could there be genuine losses on the loans that have been given to some of those firms? And then I'll tie it to the Indian context, whether there is merit or no. But Rubin, could there be genuine problems for private credit loans, if I can call it loans, or money is extended to global firms on the tech side because AI is disrupting them?
So, not at all. We are actually far from it. See, I'll give you some very simple yet very impactful statistics. If you look at the Indian private credit market, we are a very small niche.
Rubin, sorry to interrupt you. Right now, I'm not talking about India. I'm talking about the West right now.
See, in the West, yes, I am a little concerned because in the West, private credit has now become a mainstream. US private credit market currently is around $2.3 trillion and annual deployment is $600 to $700 billion. So in the overall GDP context of US, which is say around 30 trillion, it has become a mainstream and it is a little worrying the way things are right now.
Okay. Fair call. Now, before I come to the Indian private credit scenario, Sachin, could it happen that if there is a private credit winter in the West, could it have an impact on how people view the private credit industry in India? Factually, maybe correct or incorrect is a separate question altogether.
You see, definitely we have informed investors. It's a well-networked world that we live in. So any event that happens abroad will definitely pose questions as to whether something similar could happen in India, because we live in an interconnected world. But I believe, as Rubin was alluding to, the reality of the Indian markets is very, very different as compared to the US. For instance, here we have essentially close-ended funds and where only qualifying investors can invest. So the guardrails are in place, unlike US, where a lot of private credit funds also take leverage. They have quarterly windows and a lot of retail participation. So here we believe that when we explain the differences that are structurally present in India versus the US market, that should be a good message to give to the investors as to why the two markets are fundamentally different. And it's unlikely that what is playing out in the US would play out in India as well.
Fair point. And I'd like Rubin to add to this, but viewers, the reason why this becomes important to have this conversation as well, because while a lot of retail money may not be going into private credit, we've seen this industry in India grow leaps and bounds over the last 5 years, and there is a significant amount of capital that now rests with the private credit firms, which they are co-lending, if you will, or lending into the Indian infra and other ecosystem. Now, Rubin, you were making that point earlier about how India is different. Sachin alluded to it. You want to make that point as well.
Yeah. So in India, we are right now in a very early stage of evolution as far as the private credit industry is concerned. If you look at the total private credit AUM in India is just about $35 billion. And annual deployment is in the range of $12 to $15 billion. Now, in the context of our GDP of, say, $4 trillion, and in the context of our relevant market, which is, say, the corporate bond market and the wholesale loan market, that's about $1.7 trillion. So we are just a small niche. We are a blip. We are just about 2%. And in a very early stage of evolution. So there is no systemic risk, number one. Number two, Indian private credit firms operate very differently compared to the West. Our leverage levels, when we lend money, we are typically lending at below 4x debt to EBITDA. In US, typically private credit funds exceed 6x. So there is an inherent risk there. Our structures are very different. We are typically lending in senior secured instruments or senior instruments. In US, typically you have a lot of fancy structuring like mezzanine, junior tranche, etc., etc. So there is a very fancy slicing that happens in the US market. Number three, most important point, we are a very collateral heavy and covenant heavy market. In US, there is very loose covenants and very low collateral because these are all typical syndicated loans. In India, we have bilateral conversations and very heavy on both covenants and collateral. And lastly, very macro point, if you look at our current corporate balance sheet strength, bank balance sheet strength, we are actually in a very nice zone. Thanks to the post-COVID rally, a lot of corporates have deleveraged by raising equity. Banks are in very good shape in the last 2 decades, I would say. So in India, contrary to what's happening in the West, we are actually in a very benign credit cycle. And this should last for the next 4 to 5 years at least.
Okay. Yeah, the cycle in India different. It started off late, maybe still at the nascent stage. Let's see how long it lasts. But clearly, the two experts who, of course, remember viewers, run private credit funds in their own right in India, believe that that space is very different in India versus what's happening in the West currently. Thank you so much, gentlemen, for joining in for this very quick conversation.
Nikhil with us. He's joined Managing Director at Sentum Electronics, speaking with us. Thank you so much for joining in. I think the order with HAL is what's in focus and what is exciting right now. Knowing that these are sensitive areas, what can you share with us about details and the order book outlook?
First of all, good morning, Tamanna, and thank you very much for having me on the show this morning. Indeed, this order from HAL is a big milestone for us at Sentum Electronics. Not only because it's a major development program, but also it marks a strategic evolution for us as a company from being a provider of the subsystems or the building blocks of critical platforms like this to a full system integrator. So just to tell you a little bit about what we're doing here, the scope of this order is to deliver this AESA radar for the utility helicopter marine. What this radar is intended to do is essentially to play a very critical role in enhancing the situational awareness, improving the surveillance capability, and overall strengthening the operational performance and effectiveness of the helicopter platform. And what we are going to be doing as part of these two phases of the order that was just mentioned. The first phase is clearly the development of the platform of the product. So we will be designing a few prototypes, ensuring that they meet all the required performance parameters that have been set out. Undergoing a very stringent qualification and certification for the product. And then finally, of course, the integration on the platform itself. So yeah, major program for us.
Major program, and I think a lot of your investors will be very keen to hear about what the prospects are going forward then, because you've called it a milestone. What are the implications? So this order is certainly a very large one, Mr. Mallavarappa. I hope I got your name right. And so therefore, the question is, what are the prospects on the revenue side and potential order wins on the same platform going forward?
Yeah. So for first of all, as I mentioned, our typical business has been at the subsystem level. Or typical order value maybe in the range of about 50 to 60 crores, for at this level. But as I mentioned, going up to the system level represents an order of magnitude larger order size. So it clearly represents a bigger addressable market for us. So this program itself, like we mentioned, is close to around 600-700 crores in terms of this platform. But once the technology is proven, we can clearly try to integrate for an air navigation system, which was actually intended for ships. And that again represents a significant opportunity of about 400-500 crores over the next 5 years in terms of order booking. So clearly the shift of going up the value chain, becoming more of a systems player is proving to be a good opportunity. And I think what we're targeting for in terms of growth, especially in this part of the business, is to do 30% or more. And these type of wins really solidify and give us stronger visibility and confidence in meeting these objectives.
All right. So then a follow-up to that, Nikhil, is a question on the order book. Where does it stand right now post this milestone, as you pointed out? And where do you see yourself ending FY27 at?
Yeah. So, if we talk about the end of Q3, our order book was close to around 1,800 crores. That includes all different parts of the business for us. This quarter, apart from, of course, this significant order, we are expecting some other important opportunities to also come in Q4 that's related to space-based orders, as well as a few other critical programs that we've been working on. So we expect, and I'm only considering the phase one part of what we talked about of the program. So. Which is about 70 crores. So we expect our order book to further go up in Q4, a fair amount. And again, like I said, will give us a fairly strong visibility to continue a healthy growth rate going forward of 25 to 30%.
All right. Thank you, Nikhil, for joining in and answering all of our questions.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive.